Welcome to Wealth Talk Podcast. We have an amazing guest right now, and a person that's so giving. I actually met him, like not too long ago, and as soon as I met him, he just started giving me game, just started showing me everything what's going on. Like, I'm a stranger. Why you letting me know so much? But he offered to come here as well. I reached out and right away he said yes. I appreciate his time. I want to give it up. Thank you very much, Tim Eccles.
Richard, thanks for having me, man. I appreciate being here, man.
Okay, sure. I appreciate you, man. And there's so much that I want to get into. Just for meeting you in such a short span, I could see you got a wealth of knowledge. And that's what the Wealth Talk Podcast is all about. But over here on this podcast, we want to take it all the way back.
Gotcha.
So I want to go from the beginning, like where were you born? What was life like growing up? Tell us about that time.
So born in Canada, but my parents are immigrants from Jamaica and from England. So, they met as childhood sweethearts, moved here, young, 19, 20, had me, and then just figuring out from there, right?
And met where? Here
in Jamaica.
Oh, in Jamaica. Okay, nice.
And then they kind of migrated here together, and then, got married, had me, had my sister a year later, and then that was it, right?
Okay.
And just grew from there.
So do you remember traveling, or you were too young, like when you...
So, didn't really travel back to Jamaica.
No, from when you went to Jamaica. Oh, they came here and then had you. Okay.
I never moved back there until I was a little bit older.
Okay,
So I wasn't. They're young. They're young adults trying to figure out their finances and everything. And I'm thinking back to it now. I'm like, man, what they went through, I guess, in the 80s as young immigrants is difficult, right? And we see similar struggles still happening today for people that are immigrants coming to this country, right?
Yeah. So when they came in, what was it like? Because did they have you right away, or they settled in first? Or?
Yeah, they got married right. So they landed, went to Justice of the Peace, got married, and then had me.
Okay.
Right? So our parents are still very, very young.
Yeah, and at that time, they were just starting out. So you remember, obviously, their come up, what was that like?
So it was a struggle, right?
Okay.
But, once again, think about the rate of inflation, think about the economy back then. You could, get a house or off of one income and have an apartment at first, and you kind of grow quickly to get a house, say by the age of 23, 24, off of the income where you're making $60,000 a year. Right? And get approved for a mortgage. This day and age, that's not realistic. It's not
exactly.
Gonna happen, right? But I remember seeing them go through that process, being thinking about what the age they were at when they had their first home, and raising two kids, right, and juggling everything. And that's a story that I think a lot of us kind of resonate with, because we've seen that firsthand. So I think that's where our work ethic comes from, our drive, our dedication comes from seeing what, once again, immigrants come into a foreign country and making it work and actually starting to thrive. But not being wealthy, but still succeeding. Right? Whereas in this day and age, you have to be pretty successful to even own a home now.
Exactly.
And once you're successful, you have to have, good income, good career, $100,000 at least a year kind of thing.
Even right now, people getting $100,000 is not enough to own a home, But so at that time though, because I want to go back into that time, right? Because you're coming up, you see them struggling. Do you think they made an impression on you, in terms of what they were doing, and how was it as a kid? Were you still enjoying your time, or did you feel the struggle?
So, my parents did a really good job to, I guess, shelter my sister and I from seeing the struggle, even though we were, aware of it happening, but we never really wanted for anything, because, once again, we understood the work they were putting in and the time and the effort, so we weren't, we didn't need a lot.
Okay.
We just needed, hey, we have a roof over our head, we have food in our bellies, we don't need much else, right?
And,
I had a Nintendo, Super Nintendo, we had a bike, but, when you see some other friends of maybe different, ethnicities, and we're kind of in a melting pot, so you see other things, but you're not really comprehending why they may have more, or why they may be in a certain situation versus where you're at. But you don't really compare at that age. Not until you get older. Junior high school, you start kind of comparing and seeing kind of the social class differences. But when you're young, you're kind of oblivious and kind of protected from seeing that.
So that's what. So you were there. I guess you're enjoying your time. You've seen this stuff. So when was it that you said, okay, you know what, right now there's there must be an easier way or something like that, because you said when you reach high school and stuff like that, like what was there like a particular situation that made you like give you like an aha moment or something like that?
A little bit, yeah. So, I got into computers. So my father, he was an electrician, and he got into like IT, building like what's it called? Like hub centers, or like those kind of like, what are they called? I can't remember the name, but I'm talking like
We're
like network centers, right? So you set up all the different routers and like the stack routers and all that for big corporations, banks, and things of that nature. So I seen it from a young age, and then he would kind of bring me on site at a young age to kind of help him on the weekend, do some cabling, some wiring, do some configuring. So when I was in grade 4, grade 5, I started to like build computers and understand how they worked.
Oh, wow.
So I got on the internet very, very early.
Okay.
So I was kind of ahead of the curve. So fast forward a bit till maybe, I think I'm 12, 13, I get on like the internet, like,
okay.
And I'll go deep a little bit. MIRC, FTPs, that kind of stuff. Where,
is that like the coding or something?
It's kind of coding, right?
Okay.
Now we have BitTorrents and all that kind of stuff, right? It's easy to get, but I was getting that stuff through like
from early.
You
were there in those big rooms where all those machines and cords and everything. So you got it from that time.
From that time, and then something clicked in my head saying, "Hey, there is a demographic, and I love music, right?" So he said, "How can I turn this into and this is I'm 12, 13, thinking about how to generate revenue from doing this, right?"
Okay.
So I said, "Okay, Dad, I want to get a CD burner. I want to do all these things. I want to get a printer so I can print labels." And I'm thinking like this as a kid. As a kid. But he's telling me, "Hey, there's expenses, there's overhead." What's expenses and overhead? Like I said, "Hey, your CDs cost money. The ink to the printer costs money." So he's teaching me these lessons from a very young age. I said, "Okay, so if I'm going to sell somebody a burnt CD or whatever of XYZ, I have to factor those variables into my pricing." And now as I look back, I'm like, as a kid, I was kind of conditioned to be an entrepreneur. My brain was always firing in this type of, type of way.
But you said your dad taught you about that. Like, was your dad like in that?
So he was an entrepreneur, but he wasn't in like stuff out, but he kind of just taught me the principles, and I had to figure out, okay, how can I take those principles and apply it to a different industry, because I wasn't doing what he was doing, obviously.
Yeah, exactly. But like you said, expenses, and because I remember the first time that same thing happened to me. There was a showcase that we were running, and it was at the Rose Theater here in Brampton, right? And at that time, we had the vending down, right? So I had sponsors, Vinny's Pizza, shout out to Vinny's Pizza, and they were giving me pizzas. So they say, "Okay, we give you the pizzas, and then we're gonna charge you." Like they didn't even they told me the price, but it went over my head. My whole thing was, okay, yeah, everyone's gonna get pizzas, like that's all I was thinking at the time, right? Okay, perfect. And they were sponsors, and I wanted to create value for them of being sponsors, right? So I'm like, okay, we're gonna come in, at the showcase, everyone's gonna have pizza. So we're going, and at the event, like all I see is everybody with pizzas, boxes, all kinds of slices, and we're selling for like $1 a slice, And then I was like, holy, like a lot of pizzas coming. Even down, like I seen them, the guy who was delivering, he's like, "Yo, Rich, you got us working today, So they're going back and forth, all these pizzas. And then after, like there were so many pizzas sold, right? But they said they'll bill me after. So then after the following week, I had to go pay them the bill for the pizza, And then they told me the bill. They're like, "Yeah, it was $1 a slice." And I was like, that's what I was charging for, $1 a slice.
So you broke even.
I broke even.
Exactly.
Well, I wasn't even thinking about, but after that lesson, that's when I realized pretty much what your dad taught you from early.
And you were how old at that time?
At that time, I was probably like 20.
Okay. Exactly.
Yeah. So and you learned that at 13 and stuff like that. So so go deeper into that. So at that time about expenses, profit, right? And then you were selling CDs. Like, did you get that going? Was that happening?
And I made that my thing, right? Junior high through high school, I was the guy because I had access to music, early exclusive stuff. So and I was DJing too. So I made mix CDs and all that. And because I was doing parties, I was doing the high school events. I was out and about. I was promoting with a friend's older brother, all ages jam. So I had made a name for myself. So then I became kind of the guy in that part of the city. You want to go get some music? Go to him. I remember,
What was your name?
Back.
Yeah, you gotta throw that out there, bro.
Okay, the name back there was DJ Lyrics.
Okay.
So, and it's LYRICX.
Oh, X. Okay.
Yeah, with the X. Yeah.
Okay.
So that was the old alias. And people probably still have old mixtapes
with the DJ Lyrics on there. Yeah. Nice.
So so that was kind of how I started to understand. Okay, there's like an industry, there's marketing, there's a way to penetrate it, there's a way to promote yourself. And I said, okay, I can use all of these tools to kind of build a brand. I didn't know what a brand was back then, but now looking back at it, that's what I was doing all of those things, trying to build my persona in that industry. Right? And I'm like, wow, that's, 30 years of me, not 30, like 20 odd years of me doing this. Right? Just ingrained in me, right? So.
Was it that just that? Well, obviously, you had other things that were going on. Go into some of the other things you had going.
So fast forward. So
So after that, you had, go ahead.
Yeah. So at the end of high school now, so I got into the actual music business. I founded like a music label. So I had some friends that were, getting into trouble, things of that nature, and I said, hey, I think we can act. You guys are talented. I think we can. And I had no experience with going in the studio, mixing, mastering, how to go to the radio. I had no experience, but I had a business mind. So I said, okay. I'm not the artist. I'm not creative like that, but I think I can take your guys' creativity, package it, and turn it into a business. So that's what I did, right? I remember, somebody sent me my first business card for when I was 18. I'm like, man, I had an incorporation, all these things, right? I had found an accountant. Like I did all of the stuff at that young age, right?
So your dad put you on all that stuff too, or you
no, that was you find my way now.
So your dad kind of opened the door, and then there you just went,
I went crazy, right? And once again, all I knew was kind of music, and I wanted to be involved in it, but I didn't know in what capacity. I said, okay, there were some people at the time, shout out to Cardinal and Socrates and Chocolate, though, and guys like Mathematic and Decisive, all these Classified, all these guys that were doing well, Chaos,
Ghetto Concept,
thank you, all those guys, right?
Yeah, for sure.
So they were doing well in the music industry from Toronto and traveling the world and getting some notoriety. I said, okay, I think I can do something like this. And I actually went to school with Socrates' little brother. So I had that real close kind of like, bird's eye view, like, oh, this is my friend's older brother. That's a successful artist. One of the first ones to get signed to a label. This is doable, right? So we, I booked some studio time. We go record some songs. They're okay. And I started pushing it like how I would push my CDs, right? Going around, getting the CDs out, getting some performances. The first songs didn't get to radio, but we got better. So maybe come to the fourth song recorded, I was able to get it on Flow 93.5, get into rotation. They were showcasing one of these big performances at Dundas Square. This is all within the first of, that was that first summer. So graduated June, let's say August, these guys were performing. They were getting it. Like that's how fast things accelerated. I understood how to put the pieces together of the business, right? So looking back, these guys are like, wow, how'd you get us this far so quickly without you knowing anything? I said, I just hustled it, but I applied sensibilities of business to it. Right? So that was the first venture. And then we fast forward. So I'm running this label now. Now we're putting music out. We're traveling. We're going on tour. We're doing these kind of things. And then I get this opportunity to work at the bank in Montreal. I said, okay, I don't want to shut down my business. I want to do both at the same time. Right? So I was able to negotiate like a 4-day work week, right? And then I can do on the weekend travel if I need to travel with them and all that kind of stuff, right? So that's how I juggled both of those things at the beginning. And the money I'm making from the bank, I'm injecting that into my business, right? Because recording isn't cheap. Mixing, mastering, marketing, music videos, that's wardrobe, photo shoots, and I'm covering all those costs. Exactly. Because I'm the quote unquote CEO or whatever it may be, right? So that's how that venture went. So
when you were just talking about the bank and you said that you negotiated 4-day work week, that means they were looking they were looking for you to join. So what talk about that, like?
So that situation, like I'm actually, once again, I'll give it up to my father. He was doing some like networking stuff for them. Heard of an opportunity. They needed somebody to do some actually configuring of like laptops and then give them away to like retired employees. I said, okay, I can do that little job quick. I did that thing within maybe a week. They had planned for it to take a month. I did it all within a week. So it's done, and they go, hey, one of our like a risk analyst was like on mat leave. We have this vacant position. Do you want to try this work? I said, all right, I'll give it a try. And once again, I had gone to college, Centennial, for computer systems technology. And actually, so running the label, college first. I was doing that first, and then I fast-tracked college to graduate quick because I don't want to stay here. I'm making money, doing the music business. I want to focus on this. So I just fast-tracked college, finished that, graduated quick, focus on the music label, right? Then the bank thing comes up, and I still have the label going on. Do this little contract within the first week, and then they offered me this other position. I did it, and then they actually offered me like a full-time. Hey, you did really well with this position.
Yeah.
You picked it up very quickly. You refined the processes. You made it more efficient. We want to actually hire you on full-time.
Okay.
I said, all right, cool.
Yeah.
Right? And then I negotiated my terms at that point.
Because most people don't get to negotiate their terms, so that shows that, I guess, the technology, the IT, you had that badge on you from early, so, and they needed that. Like you said, you did it in fast time.
Exactly.
Right? But you also said that you were in school, too.
At first. So
you're doing all these different things at once.
Simultaneously. Exactly.
Okay.
Right? So we fast forward a bit now. So the label, I think 2006, 2007, when I'm going to the Juno Awards. So we get invited to go. And these guys are from Nova Scotia, my artist friends that were from Toronto, but their heritage is from Nova Scotia.
Yeah.
So we get invited to the Juno Awards in 2006, 2007, one of those 2 years.
Okay.
So we get like sponsorships. We go down there, red carpet. We're performing at all the different events, all that kind of stuff. Go to the award show. We didn't win any awards that year, but the experience was just, wow, we've arrived.
Yeah.
And I won't get into too much detail because I don't want to,
Yeah.
But some stuff happened down there, and this happens with a lot of artists and, managers, artists and their labels, because the artists kind of get to a point where they feel that, because they're the stars now, it's their show.
Yeah,
They don't need a team. They don't need support. They can do it on their own.
Yeah.
So, some things happen down there. We come back to Toronto, and we had a studio at the time that I was renting out every month, so we can go there, record songs at any time we wanted to. We're hiring our own engineers, our own producers. Everything was in-house. I actually built a sustainable business for ourselves, right? And then, after what happened, I decided to say, hey guys, I'm gonna shut down the label. Yeah. Right? You guys, I'll release you from the contract. You guys can own all your masters. Okay. I don't want any piece of it. I wish you guys the best in your careers. And I kind of washed my hands of it, walked away, and focused on my corporate career. Okay. And then now the bank had offered to pay for me to go to Ryerson to do a business degree. Okay. And go, hey, we'll fund it. Just go do it. So I was doing that, in the nighttime now. So now all I got to focus on is my corporate career and getting now this business degree as well, right? So that was kind of what I was doing. Okay. So I was doing that, and then I started focusing on getting moving up in the bank now. So I went and got my project management certification, and then I got my Six Sigma and my Lean, which is process engineering stuff, and then I started moving up the ladder pretty quickly, right? So that was the next, let's say, 3-4 years of my kind of tenure at the Bank of Montreal. Okay. I shouldn't say the name, but the Bank of Montreal is where I work for, right? Yeah. And then that turned into another situation where, long story short, I ran into an old colleague from the music business that hadn't seen me in many years, but knew what I accomplished over those times. Right? I just kind of vanished from the industry. And I won't say his name because, we had some success and failures and things, but he approached me and he said, hey, I'm in the music business. And he was doing well. He was on the radio. He was on the Apollo in New York. He was doing well. Nice. Right? But he didn't have a team or a manager, anything of that nature. I said, hey, I'm trying to do something in the music business. I'm kind of successful, but I have no team. I remember what you did. Can you just maybe advise me? I'm like, I'm not really interested. So I kind of brushed him off a little bit. And then I finally said, okay, cool. I'm going to, I'll give you some advice. Gave you some advice. You produced a mixtape. It did well. And then fast forward a little bit. He's like, hey, I'm going to LA to go to the Grammys. Do you want to roll? Yeah. And I'm like, I'll take some vacation time.
You gotta go to the Grammys.
I'll roll, right? And me thinking that, he has tickets and all this kind of stuff, we're just gonna land and try to figure it out, hustle things. I said, I'll fast forward a bit. So that trip went actually surprisingly very well. Okay. And that kind of opened my eyes to the potential of going back into the music business and making a substantial amount of money with this particular artist, because I saw his talent, his business acumen, and we had a really good chemistry together to build something. So that's what I decided to do. Okay. Right. So now I'm at a crossroads now. So I come back to Toronto. I'm at the bank. Somebody kind of, I guess was aware that I was dabbling into the music industry because they had a friend that had known the artist. Okay. Because he had owned a nightclub downtown Toronto. Okay. Performed there. So the person approaches me. I said, no, I'm not doing it. That's a friend of mine, whatever. Yeah. It gets back to one of my senior executives. They call me in. Hey, heard you're having a side business. You have to sign these forms saying that it's not a conflict of interest and all this kind of stuff. And I said, it's not even. So first, the business wasn't registered yet. So
Okay.
there's no conflict of interest with the financial industry.
Yeah, exactly.
But it's none of your business what I do outside of the work. It's not what I'm thinking.
Yeah.
So my senior VP was really nice, and I was at this time I'm a project manager and program manager at the bank for something called operational risk.
Okay.
And a new way of measuring these types of things that happen within the corporation. So. Say a branch floods, or a mass shooter comes into the corporate office, or information gets breached and gets sold to other banks. How do you manage that risk?
Okay.
And that does quantify into a financial loss for the business.
Yeah, exactly.
But the banks weren't measuring that, so we were the first bank to bring this approach called the advanced measurement approach to quantify those variables of risk on the business side of the banks.
Okay.
And we're kind of I forget the government, but I think it's called OFSI. They were actually using our our process and our model to now implement this across every institution in Canada. So I was kind of heading up that project.
Okay.
So that's kind of what I was doing at the bank, right? So now, the project's going well. I'm hitting all of the KPIs and the milestones and everything, so I'm doing well. But he's like, hey, you're a young guy, and I'm still, I'm probably at this time 28, 29, right?
Yeah.
So he's like, hey, you're a young guy, you've done well here, what do you want to do? I understand you're at a crossroads.
Yeah.
He's like, I'll do you one better. I'll give you a leave of absence for 6 months, and you can kind of figure out what you want to do.
Okay.
So, all right, cool. So then me and the artist kind of said, okay, I said, let's do this.
6 months. Let's go.
Let's go. So we set up shop.
Yeah.
We register the business.
Okay.
We have a studio. We have a producer. We have videographers. We go to LA. We go to all these award shows, BET Awards, and we go to American Music Awards. We started traveling. We go to Atlanta, New York. We're just going around. We go on these big tours, and we start building something. So we put out this first mixtape, and we got hosted by these guys called the LA Leakers from LA.
Yeah, I heard of them. Yeah.
So they hosted the mixtape it was crazy. It did very, very well.
Yeah.
So it's like, okay, we can make this work.
Yeah.
So then, 6 months passed, and I was like, I get a call back from this SVP around November-ish. He's like, hey, come back to the office. Let me know how the past 6 months have been. Blah blah blah. And then he's like, hey, so what do you want to do?
Yeah.
Right. And he's like, okay, I'll make it easier for you. I can give you a really good severance situation, and you can kind of have your swan song exit, and you can now pursue your dreams and your passions, right? And if you ever wanted to come back, you can. But he kind of did that in a very gracious kind of offer for me. So I said, hey, it's a really great career, great job, benefits, the whole nine. And people kind of will look back and say, that was a dumb decision for you to make. Why would you leave? Right? But something was telling me this is going to work.
Yeah.
And I was seeing the fruits of the labor. I'm like, oh, and it's working so quickly, I said, okay, if I don't do this now, I'm never going to do it. So I said, okay, you know what? I'll sign. I'll take the severance. I'm going to go chase my dreams and continue to be an entrepreneur over here.
Yeah.
And that's kind of how I got back into entrepreneurship.
Okay.
So, but I digress. I don't want to talk.
That was proper. No, that's what we want here in the Wild Top, because so many people are at that point right now.
Got you.
And shout out to the person you're working with, because him offering that severance, it gave you an extra thing to say, okay, you know what, this, okay, I'll take it and go, right? But and even before he said I'll give you the 6 months, so people like that, we really gotta acknowledge those people, because he kind of gave you the alley-oop.
He did, and I have to always give him the praise, because he did. He could have been, no, I'm gonna fire you, and this and that, and make a choice right now. He kind of gave me the options. Hey, this is the path I'm giving to you. And once I talked to some other HR friends, they go, that never happens. This is a once of a lifetime situation, right? And that you're gonna still leave the situation kind of clean and clear, right? And with money in your pocket.
So why do you think he did that?
Oh, I think because I was a good worker. I did a really good job for the corporation. Like I said, when I was there, I was a trailblazer, right? And I was really dedicated to my job, and I was helpful to other. So I made a real good impression on a lot of executives there as well, right? And also being a young young black men in a corporation, just glass ceiling effect, all those kind of things. A lot of those things didn't really affect me because the way I worked, the way that I worked with integrity, and I wanted to go the extra mile and improve how the bank operated. I wasn't just there for a paycheck. Which most people they're there until hey, 55, pension me out, right? And this close. Me, I was like working hard, staying late, like going above and beyond. Because hey, if I'm here, whatever I'm doing, I'm going above and beyond. I'm not just here to make a paycheck. And that's kind of how I've approached everything I've done in my life, right?
So even with your school, because you were saying you went through this school and that school and this school, and it looks like you're improving yourself, like you really care about improvement.
And that as well, right? And that was, I think, very key that I took those opportunities too to kind of continue my education and improve myself. Most people say, I'm good, I got a family, I don't need to go get another certification, I don't need that. Even though they pay for it, I'm like, why wouldn't you take it? They're offering it to you, right? So I said, we take everything that they're offering to me. I'd be a fool not to take it, right? So those are the blessings that were bestowed onto me. I have to give all praise to it.
Like that's really big, because even till now, like a lot of people, hold themselves back, to learn more. And with the map book, with the Create Wealth Network, the program that we have, and it's about all aspects of life. And there's something called the Focus 11. There's 11 things we focus on, and one of them is learn.
Got you.
Right? And just hearing you so far, it's like learning is an important thing for you.
1,000%.
Can you go deeper into that?
For sure. So I can pivot a little bit to something else, because I want to go through my entire journey, because getting into, back into entrepreneurship, I started founding other companies. So it wasn't just a label. I had a second label. I had a film and TV production distribution company. Got into the luxury spirits industry, importing a champagne and a cognac. Started consulting within medicinal marijuana, other fintech companies, commercial real estate. I started doing a bunch of stuff, because now I seen, oh wow, this is like a huge world. And because I was rubbing shoulders with certain people from my music endeavors, I got access to other opportunities because I had this business acumen. Like, okay, you're not just a music guy. You're a business guy. So I kind of found myself in other opportunities because of that. Right? And I was able to identify them and say, I'd be a fool to not try to capitalize on these other doors that are opening at the same time. And you always hear every wealthy billionaire, millionaire has at least 7 streams of income. So that was kind of always my ideology, to create other revenue streams. People were like, how did you build those other companies? I had other partners that were kind of the subject matter expert in the industry. So I'm not a film director or a producer, but my partner went to film school at I think the CBC Film School downtown. He had directed music videos and short films. I said, okay, this is the guy I can partner with. And he actually brought me the opportunity. Hey, I think we can do something in distribution and production in film and TV. I already do this for a big company. We were working for E1 at the time. I think we can do this for ourselves. So then, because I was already traveling out in LA, I was in Hollywood, I was able to get certain deals because I was already in the industry. Right? So I'm out there for music, say I'm on tour, meet somebody else with, hey, I'm shooting this film, but I don't have a distributor. Hey, I have a distribution company. And I would parlay that situation into my other company. Right? So everything I was doing just kind of worked cohesively. So it wasn't like I was making a stretch to try to run this business and that business. It all kind of went hand in hand.
With who you are. What you just said right now is taking in, was it the Pivot podcast, and Shaq was on there. Right? And that's what he was saying. He's like, he has I think he's 100-something businesses. And he said, he does a joint venture. So is that what you're talking about?
Essentially, yeah.
Joint
ventureships. Yeah. But I was a little more hands-on, because once again, I can build business processes in pretty much any industry. So I don't have to, once again, be the subject matter expert within the technical aspects of that industry, but I can understand, okay, I can take what you're working on, which is like the meat and potatoes, and I can build a successful process from end to end around that.
And that's what you went for, all that learning, all that studying got
that's
you
all that I learned from my time at the bank, and everything's how to build processes and how to make them more efficient, lean them out, and make them successful. And how you can implement them and sustain them. So that's kind of one of my, that's my secret sauce. Right? And I apply it to almost everything that I do.
That makes sense. So right now, you're still, learning. Of course, I think that's part of who you are, right?
And I'm a forever learner.
Right?
And they say, once you stop learning, you might as well cease to exist. Like learning is the catalyst of all success, right? But also, people don't like to talk about this, but the failures, right? I always say when I do speaking engagements or whatever, I speak to like other young entrepreneurs, I say, failure is the price of admission for success. Like you can't avoid it. You can't. Like it's impossible to avoid it, right? You may hear some success stories that, the one-off, hey, the first time they hit a grand slam and they succeeded. That's very few and far between. Right? Like I said, a lot of those companies that I started after I left the bank, both labels are now gone, right? The film and TV production company, dormant status, and my partner's kind of doing something else now. The liquor company, I'm about to shut that down because of all the stuff with the LCBO and the COVID, it's called the supply chain shortages and all that kind of stuff. So COVID really creamed us, right? Plus the levies and the duties and everything got increased. So our profit margins in the liquor kind of makes no sense the way the LCBO runs. So I said, okay, what else can I do? So I was kind of dabbling in crypto all this time, right? And I was really big into Bitcoin, and I was doing these kind of OTC, which is kind of over-the-counter deals.
Okay, so let's start there though. Like I don't want to go all in because last time I talked to you, it was going over my head. So let's start from the beginning. So if we talk about crypto, because everyone probably knows when the first time they heard about crypto or whatever. When did you first hear about crypto? And
so to be honest, a friend of mine was doing Forex.
Right?
And then he kind of dropped the bug. He had a very successful brokerage. He was doing very well, and I put some money with him, invested with him or whatever in Forex. But I didn't understand before. Even though I worked for a bank and I traded myself, I could never do it as efficiently as he did it. Right? He had algorithms, and he's a mathematical guy, right? So
he was trading for you.
Trading for him, right? But he had it kind of on an automated system. And kind of following the same type of trends that institutional investors were doing. Even though he had a smaller book of business, he can kind of utilize the same polarizing techniques to be successful on a smaller scale.
Nice.
So then he started telling me, hey, I'm going to pivot into crypto and try to do trade Bitcoin and all that.
What year was this? Do you know?
I'd say probably 20... So when I was just leaving the bank, so about 2012...
So 10 years ago.
That I started hearing about.
I
think it came out in 2009.
But
I wasn't really hearing about it those times. And maybe I heard of one, too, but I never really looked deeper into it. I'm a corporate guy. I'm working in the financial business. I didn't really understand what it was at that time. Right? But then when he kind of started showing me about it, I'm like, all right, it seems interesting, right? But I never really jumped in. I said, let me stay on the
What was he showing you?
I think this is going to be the future of currency. And how every institution's gonna, manage money and transactions. It's gonna be faster. It's almost like our new digital gold. Is how he said it to me, right? Digital gold. Interesting. And then I started hearing other people refer to it that way as well. So once again, I didn't really invest at that time. It wasn't until maybe 2016. Now I said, okay, let me. And now I was studying, I was reading about it, so I was like, I believe in this technology. I think the blockchain is going to revolutionize how the world does transactions financially and other things as well. Right? But I knew for the financial, because once again, I worked for the bank, so I knew how antiquated, how broken, how insufficient it was, and the bank's going to build all these GUI interfaces over top of it for it to work. But it's so broken. Right, and because I see the mainframe, I see it, right? And when I was my first career, the risk analyst, I had to go and do that. So something called CCAPs, where how you get the mortgages, it's all done kind of like a DOS system. Right? And I'm like, this is how the banks do this? Wow, this is crazy to me, right? So I said, okay. So crypto made sense to me, and all the different layers you got to go through to get a mortgage and get financing. It's just I know. I'm in the real estate, so I know what it is. For sure. So I see this as this is a solution that's gonna, it's gonna solve all those pain points. And make it kind of one seamless process. And I'm a process engineer kind of guy, so the process made crystal clear sense to me. And even the business objective of it made sense to me as well. So I started to dabble into it.
So at that time, was it just the coins? Because when I first heard it was more just, invest in these coins. Was it just the coins that were out at that time?
At that time, yes. Because you couldn't really invest into Bitcoin at a level like, say, an IPO. There wasn't that. Because it's peer-to-peer, right?
Yeah, exactly. So what coins was he talking about for Bitcoin?
Just Bitcoin.
Oh, just Bitcoin.
Just Bitcoin, right? Because Ethereum didn't get created until, I think, 2013 and 2014-ish, something around there. Bitcoin was the one.
The Bitcoin,
There was other ones that came out, and I forget the names now, but they weren't as sophisticated as Bitcoin. They're kind of using the same what's it called, like a fork. So they're using like a derivative of the Bitcoin code to try to create their own coin. But because that code is so efficient and so kind of like bulletproof, it's hard to make a duplicate of it and make it work better than the original. Yeah. So it's like, what's the point of using it? Exactly. Right. Yeah. So Bitcoin was, and a lot of people, and it was hard to buy Bitcoin. Okay. There wasn't a lot of exchanges. Even to get KYC, you would get declined sometimes if you didn't have certain. What's KYC? So know your customer, and a lot of banks use that as well to open a bank. It's kind of know your customer. Okay. Right? So it's what I forget what the financial, but the SEC or the CC or Canadian Securities Commission, whatever. They use the same kind of guidelines, right? But all the exchanges have to adhere to those guidelines. Yeah. But a lot of exchanges weren't sanctioned to operate in Canada or in any parts of the world. So they were in Asia, they were in Europe, and pretty much it. And America was kind of very, stringent about it, same with Canada. Yeah. So you have to kind of get Bitcoin through all these different means. It's like people thought, hey, Bitcoin is like the dark web. And it kind of was, because that was the only way you could get access to it. Yeah. And then you started to loosen up. So I got... And that time you needed like the little wallet, because I remember when I was introduced, that's what my friend was telling me. He's like, yeah, you need this wallet. You have to store it somewhere. You have to remember the password. It's called a ledger. Yeah. A ledger. Okay. So that's how you have to kind of do it. You have to go meet somebody in person and deal with it that way. Okay. Right? Yeah. So that's how I started getting into it like that and meeting people that want to do like more deals face to face. Hey, I need to buy 5 Bitcoin. At the time, this is like $5,000. It's maybe. I think at the time when maybe it peaked at like 10 grand or whatever. Bitcoin? Yeah, this is like 2016, 2017, and then it crashed. Okay. Right, and went back down to like 3,000, 2,000, right? People like, oh man, it's over. It's done. Right? So for me, I still believed in it, right? But I said, I need to make money off of this. So what I was doing was kind of just trading the coin and kind of selling it to people and selling it at market price plus whatever percentage on top, right? And that's kind of how I was making money. But me, looking back at it, I wish that I would have held on to it and used the currency within the ecosystem versus me pay me cash for my Bitcoin. I'm investing in them. I still have the companies that are business. So I'm investing my fiat back into my business. Right? Okay. Because I had something that I needed to use the money for. Yeah, exactly. Right? So, that was kind of a misstep from me back then. Well, that's what you needed to do at the time. For sure. For sure. But once again, they say hindsight is 20. Yeah, now that you know now where it's at and everything like that. So you had Bitcoin from the beginning, from early. You had early on. Bottom line, you had Bitcoin, and right now people used to get fractions. And I was telling a lot of people about it too, and people would buy in, and then when it crashed, everybody's, hey, Tim, it crashed. You told me to buy this thing, and da. I said, relax, just hold on to it. It's gonna bounce. Okay, so you weren't nervous. You knew it was gonna. I wasn't nervous. Okay. But I'm gonna say, I have a very high risk tolerance, as you can tell. Look at all the risks that I take. So I have a high risk tolerance, so I can wait it out. I've seen things go to zero, right? So that didn't frighten me, right? And that's why I was able to kind of continue on. And so after that, I started getting into like ICOs, which is like initial coin offerings, which are like IPOs, right? So a lot of people were kind of going, and there was some regulation around ICO, so they can go to the SEC in America or the CSC here and get approval to release a token, like a coin, on exchanges here in Canada or America that were now sanctioned by the country to be able to trade crypto. Yeah. Right, so I got into some of those and helped people raise capital for the ICOs, and I'd be able to hold some coins as well. Okay. And sometimes there's lockup periods. You have to divest. Well, how did you connect with these people though? Because I was already in that. I was already in that world. I was already moving around, right? Because I was very visible with my music business and other bits. So and people understood Tim as a business mind. And I came from a financial background. So a lot of these things. So they'll run it through you. Everyone runs something through you because because you're like a computer, so you'll process it. Oh yeah, okay, this is good. This is okay. You got it. That's how. So that's how things always came across my desk, right? And things that were probably like so far left field, but I can make sense of it because this guy can make sense of music business and monetize it and make it into like something that makes sense financially. You can probably do that with any industry. Exactly. And that's what I try to position myself in. Yeah, man. Okay, now but go on, man, because you got the Bitcoin, like you have it, you're selling it, you're trading it, and then now you're in the ICO, so now you have the coin offering. So
I guess that's you're investing in crypto in a sense.
Heavily
Now, but now it's not just a point. Now you have the ICO. Okay, then go on from there.
So then ICOs kind of had a bust, let's say around 2018, 2019, where a lot of them didn't turn out or amount to anything because everybody was seeing this crazy, hey, I can do an ICO and make 20 million, 50 million, 100 million pretty quickly. They were doing that. And then they had no other kind of roadmap to build out the coin for it to be sustainable or for it to really solve another technological issue that we have in the world. Right?
Yeah.
They were just kind of making a coin to make a coin because they could. And they kind of went through the steps because they had other businesses, so they had the acumen and they had the trust from the regulatory boards to give them the authorization to do this.
Okay.
But a lot of people didn't do anything with it.
Okay. Right? So that's why there's so many coins that are out right now, right?
So let me fast forward a bit now. So why there's coins that come out so quickly now? Because you don't have to go through those kind of like hoops anymore to release a coin. Anybody essentially can release a coin.
Okay.
You hire a developer to write your smart contract. You actually build it on top of Ethereum, or you build it on top of Binance, or you build it on Solana, or all these different. There's tons of chains now that exist. You build on AVAX, and essentially, if you have the liquidity to back it up initially, you can release your own coin.
Okay.
So that kind of is crippling the industry in a sense because everybody's releasing a coin. Like every day, literally. Coins come out every single day. Whereas in the ICO era, it would take a couple of months for an ICO coin to come out.
Okay, yeah.
But now that's erased.
Okay.
Whereas now people, that's it. So there's a lot of scams.
Yeah, because it's not regulated really, right?
It isn't.
Yeah, okay.
Right?
And I think that's why I guess a lot of people are saying, oh, crypto this, crypto that, because it's not fully regulated. I guess anyone can really do what they want with it, right?
Essentially. But, you can look back to the ones that are the core. So Bitcoin, Ethereum, XRP, Solana, Cardano, those ones actually have like a business behind it. And yes, they may not be regulated, but they're the ones that majority of exchanges are built on the backs of those coins.
Yeah, exactly. Yeah, right? They're the heavyweights that, I get you. It's kind of like with the Forex, you have your main pairs that, okay.
So that's kind of what Bitcoin, Ethereum, and Tether, which is USDT, which is pegged to the American dollar. So those are kind of semi-regulated in a sense, right? Okay. Those are the ones that all the exchanges operate in. So even right now, there's these arbitrage exchanges where they trade Tether, right? Because Tether is, like almost like legal tender in a sense. Okay. But it is pegged to the American dollar, so.
Okay.
So people do that. That's not my angle, but people do use that, those systems and methodologies, and they are successful, right? But it's way low risk at that point in time. So you're not going to see these, these parabolic explosions of like wealth in those spaces. You'll see consistent. Maybe you're making 3% per month. Yeah. The majority of people, if I'm making that per month, that's pretty healthy. Yeah. Compared to what a bank offers you on.
And even your savings don't get nothing on there. Okay, so you put it in there.
You got it. But once again, there's still, an error or slight, gap of risk there. Right? But most people say if it's small, USDT is a small risk to take. It's not really gonna crash. Right? Because it's pegged to the American dollar, exactly. So it can't crash. So that's a safe investment. Okay. But once again, the crypto really isn't built on the back of that. It's built on the other emerging tech in the space, right? And I think that's what people really are hearing about, and that's where people kind of have to take a bigger risk in those things to really have true success in this space.
Okay, what are you talking about?
So, you hear NFTs now. You hear about decentralized finance, where there's so many layers to that, where you invest into a token and it compounds interest like aggressively. There's APY, right, which is like the annual yield per year kind of thing, or annual yield per coin. And some of those APYs are extremely high. Like, I don't even want to say the number on camera, but some high numbers, right? And people kind of invest into that, but those ones are very risky because you can make this crazy ROI in a small amount of time, compounded, but you have to invest a larger amount of money, and you have to understand, hey, this thing could go left very quickly as well. But, then there's another side to DeFi where people can actually loan out their crypto and charge a percentage on top of it. Where you have money in the bank makes money on your money by loaning it to other people. DeFi allows you to really be your own custodian, your own kind of like financial controller.
Okay.
Where you say, okay, I have XYZ Bitcoin, and there's platforms that allow you to do this easily. You can do it privately as well, but there's mechanisms in these platforms that do it for you in fixed rates. You take a little percentage, and it's all very seamless. Where you can loan a Bitcoin to somebody who wants to leverage it to do something else. Say they're, I don't know, when you use Bitcoin to, trade for real estate or whatever they want to do.
Yeah.
And like, hey, I have the Bitcoin, I'm not selling it, but rather than it just sit there and once it can go up and down in fluctuations, I can loan it to somebody else that's going to use it to do something, and not charge them a percentage to do that. Do that with Ethereum. You can do that with pretty much a lot of the, I don't want to call them blue chips, but the top 25 coins. You can pretty much.
What are the top coins, if you don't mind sharing on Wild Top Podcast?
Off the top of my head, I don't have the list memorized, but like the top 5 when I looked at this morning, so it's always Bitcoin, Ethereum, it is USDT, Tether, Binance, Smart Chain, which also has their own exchange, and then I think it's Solana. Those are the top 5, if I'm not mistaken. And then 6 below kind of fluctuate, so you'll see them kind of teeter-totter. So some days there'll be another coin that's 6, and then another one will pass it and go back down, and they kind of swap. So the next 6 to 25 changes pretty actively on a weekly basis.
Okay, so are they changing like the other market where like people are trading them? Is that why like they're fluctuating?
100%.
Okay.
And I'll give you a good example. So I want to give context to this example because it's tied to an NFT specifically.
Okay. And
NFTs are non-fungible tokens, right? Where the dollar is fungible, where you can trade $1 for $1.
Yeah.
Whereas the NFT, the value of it is, it's not finite. It's kind of up to the 2 people in a transaction. So say I have this asset that I think is worth this, right? And the person says, okay, I think I agree with you. I'll pay you X for that token, right? Can we pause for a second? Sorry. My phone has been going like crazy.
Okay, no problem. This is a Wild Top Podcast, man. This is what it is, man. We're out here, we're busy or working.
I apologize.
You're on the biz, so it's all good. That's what we got to do for sure.
I think who's been calling me so urgently, but it's all good. So, non-fungible tokens, which is now all the craze right now. Right?
Yeah.
And I'm pretty invested in this industry as well, and I kind of got in not as early as everybody else. I kind of got into the second cycle, maybe a third cycle. Okay. But there's back to tokens now. So some NFT projects, in their roadmap, they have the non-fungible token, and then they have like more of a fungible, which is like a token, like a Bitcoin or Ethereum that they can then trade on an exchange.
Okay.
Which now gives you some liquidity to the NFT.
Okay.
And that's a little more complex, but I'll explain that a little bit later.
So NFTs tied to a coin?
Sometimes, not always.
Okay.
Well, I'll talk about one specifically that does, which is called the Bored Ape Yacht Club.
Okay.
Which is by far the most successful NFT project that has come out, and it came out April 2021. So it's been out for a year.
Okay.
But they've, right now, they're like a $20 billion company that these 4 guys built within a year.
Wow.
So they have like a valuation in the same breath as like, Louis Vuitton or Moet or all these companies that are like, multi-billion-dollar corporations. Yeah. This NFT company, 4 guys that release these pictures of,
the
apes, has a valuation of that much, which is insane. Yeah. So, I digress. They've given back so much value to their holders, but one way they did that was with a token that came out in March. Okay. So their own crypto coin built on top of Ethereum. Okay. So like that token has a market cap of I think about $8 or $9 billion today. Wow. Within a month and a half. Wow. Of being in existence. So they jumped into the top 25 very quickly. Okay. So I think they're ranked maybe 20 or 21 right now. Wow. For being a month and a half old. Okay, so the people who have that, are those only the people that have the Bored Ape, or other people have it too? So initially people with the Bored Ape got allocated some of those coins, just for holding that NFT. Okay. And they have to go and claim it and put it on an exchange or put it into their own private wallets. Okay. But, the same day that it launched, for the holders, exchanges all over the world, Binance, Coinbase, Crypto.com, KuCoin, they all also listed that coin. They took it on board. Yeah. So because the name is, I guess, so big, right? And it already had built-in liquidity immediately, right? Because they have a treasury. Okay, so they want to put them on because they know a lot of people are going to exchange them. You got it.
Okay,
so
it's making sense.
A lot of investors, a lot of institutional money got into that coin very early as well, right? So that coin now is another coin that people are probably hearing about and they want to trade it.
Yeah.
So that price kind of went all. So I think it opened up maybe for the apes when they were selling it back to the market, maybe $7 or $8 Canadian.
Okay.
Within the first couple hours, and then it jumped to like $21 in that same day.
Oh wow!
So I know some guys that sold it that first morning, like 8 o'clock in the morning. They go, okay, I got the coin. So I'll give you the story. So everybody was expecting it to open up at $1.
Okay.
So the Bored Apes get the most allocation. Then they got 10,000 coins. There's another NFT that the Bored Apes gave you, where it's called the Mutant. They got 2,500. And if you had another companion third NFT they gave you, you got another allocation. Right? Okay. If you had all three, you got the max allotment.
Wow. Okay.
I know some guys that have apes and have mutants, whatever. They go, okay, if I'm going to get the full allotment, if I have all three NFTs, I can maybe cash out $20,000 today. Best case scenario, right?
Yeah.
When it opened up, when he saw that it was like $7, $8, like, that's, that's not 20,000. That's almost like $100. I'm gonna cash out. If they had waited a couple hours later, afternoon, guys are cashing out at $21. So say you had a Bored Ape. There's a Bored Ape. There's a NFT. And you got allocated 10,000 coins. At $21, you're selling to the market.
Wow.
Just for free. Just for holding the NFT.
Holy.
So people were losing their minds. Right?
Yeah.
And then so now institutional money saying, oh, this coin opened up on day one at $21. Buy. Because they go, the trajectory of this coin is going to go 30, 40, 50, and they're going to make a mint of money because they bought in at the top. What happened was the coin started to dip.
Okay.
Right? But once again, if you're a long-term holder and kind of understand how the markets work.
They're moving waves, right?
Moving waves. So you just hold it, and you may have a little bit of a spread and sell it to other exchanges. That there's a because every exchange has a different price that they sell the coin at. They have a maker fee and a taker fee. Right? So you may sell it to an exchange over here because they have a lower, taker fee. And I'll make a little bit, and that's the arbitrage people do sometimes, right? That's not how I do, but some people do it that way. So then what happened was this coin was really for something else. But the way they had planned the marketing around it, they go, okay, we're going to give you guys the apes value and give the industry value. So it's a coin that has value now, but it's not really supposed to be exchanged as a token. It's more of a governance token. Voting rights, all this is what we do for that. The exchanges now made it have value. We didn't make it have value. The exchanges did. That's how they can kind of be operate that way. But they go, hey, we're not really trying to sell this to make a profit, just so you know, right? You guys backed it up with your own liquidity.
Exactly.
So that's.
But they did build that brand. That's what happened. They built the brand, so everyone's just going and trading it and making money from it because they don't have the actual ape, right?
And that's the way into the ecosystem because of an ape right now. I think it's 100 and the last check, I think it's more than 120 Ethereum. Which is around $530,000 something like that for one. For the cheapest one.
And how many are there?
10,000 of them.
Okay, 10,000.
Which is
that's it. There's no more.
There's no more.
Okay.
It's a very limited supply.
Okay, so that's why it drives it up, right?
You got it.
Like Bitcoin has a certain amount too, right?
It does, and that's why that value is so high as well. Same thing with Ethereum. Right? Ethereum, they just actually. Well, not yet. They're going to actually cut off all the miners, and there's going to be now like a burn.
Oh, wow.
They're going to burn a lot of the Ethereum. It's going to be now a fixed amount as well.
Oh, wow.
So that's a little alpha here. We call people, hey,
that's a gem right there.
Ethereum is going to be something that's going to be similar to Bitcoin, and there's actually more use cases for Ethereum than Bitcoin. Bitcoin is like gold. You don't go to the supermarket and shave off gold and buy your groceries, right? So you don't want to use your Bitcoin to go do transactions. If there's a guy that, there's a story. I think it was like 2010, 2011, he bought
the pizza. Yeah, I heard about that.
But essentially, it's like you shaving off a bar of gold and paying for something.
Wow.
You don't want to use Bitcoin to do transactions. It's so valuable.
Yeah,
right?
exactly.
And Ethereum at the time, when he built it, was more of, a language to do other things other than just transfer money. Right? It was, hey, I can use it to send information back and forth. I can use this to secure, let's say, real estate. I want to use the smart chain or blockchain and use the Ethereum blockchain and smart contract to lock in the deeds and ownership right, all these different things for this real estate asset. And you can use the blockchain to do that. And people are doing that right now in America. They're using Ethereum and the blockchain to make smart contracts to do a transaction with real estate.
Okay.
real estate. And they can just transfer this token that has all of this information. So it doesn't have to have value per se. It just has the information in it, and you can transfer it to the new owner. So you don't have to go through all the lawyers and all the escrow and all that kind of stuff, because the blockchain is kind of like everything built into one. So it's all your contracts, it's your escrow, it's your custodian, it's your validator, it's everything all in one.
Okay.
And I think a lot of people are not thinking about the blockchain in that way. So thinking about it as like transfer.
What's her name? Ashley Wright. You know, that's where I met you from her summit that she was doing, and she was on here as well. And that's where she was talking about the blockchain, and she was going deep into the blockchain.
100%.
You know, and I was talking to you, and you're talking about NFTs and the metaverse and all that kind of stuff, and it really opened my mind up, because like, holy, like, this is not just coins. These are not just coins that are going on here. It's like a whole world that's going on.
And I think that's the part that's lost on a lot of people, that they don't understand is bigger than just the money. They see that there's a lot of money being injected, like billions of dollars. I'll give you the example. So just NFTs alone, not all the other aspects, just NFTs, a marketplace called OpenSea. I think the first quarter of this year, which is like from January until April, end of April, they transacted, I think it was like 15 or 16 billion dollars in just NFTs.
Wow.
In the first 3 months of the year.
That's serious.
Serious amount of movement. I'll give you another metric. So back to the Bored Apes again. So they had a drop this past weekend called the Other Side, which is their metaverse play.
Okay.
And if you had a Bored Ape, you got the land for free. But if you won a raffle, or if you put your name onto a KYC list, you're able to participate in a public auction to be able to buy one of these plots of land. But so in that evening, so Saturday evening, within a span of 2 hours, that auction amassed $350 million worth of revenue for the parent company in 2 hours.
Okay.
Which is crazy.
That's serious, yeah.
And then the amount of Ethereum that was burned, because Ethereum got to spend transaction fees or gas to use the blockchain to send information back. It's not free to use the blockchain, right? Because there's miners that are mining the Ethereum and keeping the blockchain open. It's a peer-to-peer thing as well.
Okay.
Right? So those miners have to get paid out from the transaction fees to operate on Ethereum. But the amount of Ethereum that was burned just in that auction was like $175 million.
Holy.
Just in transaction fees.
Wow.
Because everybody wanted to get a piece of this land. Because this is the fourth project now released from the owners or the founders of the Bored Ape, which is called Yuga Labs. So this is you bet on a company like that, because they're builders and they've had success upon success.
Yeah. So they know what they're doing. So when you say land, like, what are you talking about?
So digital land, called the metaverse, right?
Okay.
Which is one aspect. So the metaverse isn't just land. The metaverse is like an experience, where it's a new way of experiencing, anything that you can do in your real life, you can do in the metaverse. Think about, there's a game called, think about Sims, or a game called Afterlife, where you go set up your avatar and you kind of live a different life in the computer, in the game, right? The metaverse is kind of that, but now it's actually real. So instead of you kind of making like a fake version of yourself, people do that. They use their PFP pictures as their alter ego. Some people they craft themselves.
Wow.
Like me, I built a version of myself in the metaverse. They call it docs, right? So people know who I am, know my face, know my voice, my name, because I'm trying to be a transparent person in this space, because I want to educate, I want to be helpful, I want to move this entire industry forward and help onboard people. I think this is the future. Right?
Okay.
So wholeheartedly believe in this technology.
Right?
So the metaverse is that. That's one aspect of it. So Yuga Labs, Bored Ape creators, they also believe the metaverse that's like the future of how you really get the adoption and everybody utilizing this technology.
Yeah.
Right? So they created this, this project, which is their digital land. The amount of money you heard, $350 million that they made. Yeah. The secondary sales, so this happened a week ago, not even a week ago yet, less than a week. Their secondary sales has amounted to about 240,000 Ethereum, which is equivalent to about like $825 million in secondary sales of people buying and selling every day since Saturday.
Okay, so there's some people, I think, if they bought some land in the metaverse, and they're going to use it there.
They're going to use it to build.
Okay, to build stuff.
Yes.
Okay. And then there's other people who bought some land to trade it.
Yes. Yes.
Okay, I just want to make sure
you got it. You're on the ball. Yeah. There really is two sides to the coin.
Okay.
There's the people that trade it for monetary gain.
Yeah.
And there's people that want to use it and build experiences and build like
in the metaverse.
So
what, the metaverse has a certain amount of space, like the world, like we know this globe has a certain amount of space in this world.
Metaverse is unlimited.
Unlimited.
And I'll tell you why. There's multiple metaverses, and every big company wants to have their own version of it.
Okay.
My belief is, if we all work together and all the metaverses can link together, that's how you kind of make it mass adoption.
Yeah.
Rather than you have
maybe that's where it's going to go to, right? Because it's still young right now. Yeah, maybe not for a while, but if you take it in, it makes sense, right? Because then you have a metaverse, I have a metaverse, but if I want to come to my verse to yours, like, you know, what are you going to do? What do you transport?
Well, essentially, right? So there's like these portals so you can jump from one metaverse to another. Which
that's serious.
It hasn't released yet. They're trying to build that, they call it interoperability, right? So you can jump from one metaverse to another one. But once again, I'm thinking, why are we all building this segregated? Let's build it all together with one kind of idea. Even though everybody's got a different spin on it.
Yeah.
It's essentially doing the same thing.
Yeah.
So like, whose version is better? It's like you buying. Everybody makes cars, right?
Yeah,
we don't make one master car. We all make different types of cars.
Yeah, exactly.
Same thing with everybody makes a different type of metaverse. Right? But essentially, we all do the same thing. They all move forward. Every car drives.
Yeah,
right?
exactly.
Some have different features, but every car drives.
Mm-hmm.
Right? To get you to a destination.
Yeah.
The metaverse is giving you an experience within a digital world to do all these types of different experiences and things, and connecting with people, and maybe doing things that you may not have the means to do in real life.
Okay.
Right? So like a lot of people kind of create, a larger world for themselves and a larger vision for themselves.
Yeah.
And that allows them to now, think outside the box or dream bigger.
Yeah.
If I can do this in the metaverse,
yeah.
Can I translate this into something in the real world that I can be passionate about, that I want to immerse myself into?
Yeah.
And I think that's another layer that people are not really looking into about the metaverse.
That's one side, but then on the other side, it could be where, people are in the metaverse and they don't want to leave the metaverse.
And that's starting to happen. You look at the Matrix, you look at all these movies.
Yeah, that's what I'm saying.
Ready Player One.
Yeah.
They want to plug in and never come back out, right? And, I don't want it to, I want it to be kind of like...
Yeah. That's important.
Very important.
For sure.
So there's another layer of things called augmented reality, which is not really... So virtual reality is like you're just in the metaverse. You put on your VR headset and you're in the digital world, right? Just that's it. Whereas augmented reality kind of intertwines the real world and a digital world.
Okay.
I'll give you, so Nike's probably going to be the one that really blows us out the water. So they're creating like merchandise, sneakers, all these things that, and they're probably going to give you a set of glasses that has a built-in like adapter.
Okay.
So say I'm wearing like a Nike sweater, I can hit my glasses and say, okay, turn on the augmented features on that sweater, so I can see the person, and the sweater is coming to life.
Wow.
It's on fire. It's ice.
If you have the glasses on, you walk with the glass. Okay.
So that's how you integrate it. But another layer is how you're going to experience concerts in the future. So say I want to go to Coachella in LA, but COVID, I can't. Whatever it may be, you can now even put on like a sensor suit, right? And you can go and plug in to the coordinates with the glasses, and the digital version of yourself will show up at Coachella.
Wow.
And then you're experiencing with people that are actually there, and you're not old. But so it's like an intertwine of physical and the digital version.
Wow.
I think that's where it gets to. But we see the NBA, right? You have these digital people sitting in the chair. Remember the first part of COVID?
Yeah.
That's them trying to create their own type of sports metaverse as well. Right, so the players are there, but the fans aren't there. But they are there.
They are there. Yeah, they get that same kind of experience.
But that's level one, because you're just on your computer streaming it kind of thing.
Yeah, exactly.
Your webcam on. It'd be, hey, put on a sensor suit so I can hear, smell, feel, whatever, and I feel like I'm actually there. Right? The seats rumble. It feels like I'm there. I'm hearing the squeaking of the shoes. Like it feels like it's right there. That's the next level of like the metaverse integration into the real world.
Yeah.
When we get there, that's when people's minds are going to be blown.
Yeah.
And they're like, oh, okay, I get it now.
Yeah. So, and then, how you're talking, I could see the vision. I could see that happening. But I heard, I think it was like today or yesterday, I think they said something about NFTs, something dropped like 90% or something like that. Like I know for you, because you said you're in a long-term play, So it's like, okay, that's probably regular, but talk more about that. And then also, like, for someone that, okay, say they're taking in this Well Top podcast, and then they see something like that, it's like, okay, do I get it now? Like, what's going on?
So I'll give you two positions, right? So right now we're kind of in a bear market, as they call it, or we call it NFT winter, whereas there's only liquidity really. The volume of that is really between the top 5 or top 10 projects in the space. So all the smart money or institutional money, they're invested into Bored Apes, Clone X, which is Nike, CryptoPunks, Azuki, Doodles. Those are the top 10 projects that have the most value, right? And then you hear guys like Gary Vee say, hey, 99% of these projects are going to go to zero, which is kind of true because all these projects don't actually have a business behind their NFT, which is just a digital picture with no other value. These other companies are giving you other value to this picture that you have that represents your piece of their ecosystem. And they're building an ecosystem that has value that gives your token value. People don't understand it. So they create a token. There's a lot of artists that make really cool and dope art, and they put it out and they go, why isn't this worth 1 Ethereum or 2 Ethereum? Because you can build an ecosystem for it to have more value than it just being art. And now art is subjective. So if somebody doesn't really understand or translate what that art means to you, they're not going to pay you 1 Ethereum or 2 Ethereum for this piece of art that may be very sentimental to you and you put a lot of time and effort, but so the person says, there's no other value here. It's just a piece of art. But sometimes art is the utility, right? But I digress. So bear market. So now all these other projects have no volume, right? So people are actually selling those projects for whatever they can at a loss sometimes to get liquidity to kind of FOMO, which is fear of missing out, into these top 10 or get a little piece. So they can buy a fraction of a Bored Ape or buy a fraction. And there's platforms that allow you to buy a piece of a Bored Ape with like 3 other people or 4 other people or whatever, right? So, okay, $500,000, let's each come up with 125,000 and we all can own 1 Bored Ape together. And we're gonna divest all of our other, or not, we're gonna dump all of our other investments and just, accelerate our investment into 1 blue chip NFT. And that's what's kind of what people are consolidating very aggressively right now because they think that there could be a crash coming because Bitcoin is taking a big drop and everything kind of falls on the heels of what Bitcoin does. Bitcoin is kind of
the leader, so
it's the
exactly.
leader, right? And once again, I don't think the industry should follow that because every coin has a different use case.
Exactly.
But the money that controls the market still sees that Bitcoin is the
because when
only
Bitcoin took off, that's when everyone started paying attention to cryptocurrency. If it wasn't Bitcoin, no one would be paying attention.
And I agree with you. That's the grandfather.
Exactly.
Right? But it's so much more sophisticated now that it doesn't have to be tied to Bitcoin only. But once again, institutional money, that's all they can kind of quantify is Bitcoin that has real intrinsic value. So all their investments are kind of based on the value because Bitcoin has this. Okay, maybe some other coins can have value too, only because Bitcoin is high. But if Bitcoin drops, everything else drops. So they have to sell their positions and everything else, right? So that's why we're kind of in a bear market right now.
Okay, I get what you're saying. The ones that don't have value, people are dropping them, and then they're going for the ones with value. And you're saying that the value is pretty much what is behind that thing. You call it a utility, right? Is that what you say?
Yeah, well, you got it.
Okay, cool. So utility. So I know you're talking about earlier even like land and stuff like that. I'm in real estate.
Of course.
Right? And of course, a lot of people in real estate, we know real estate builds generational wealth, right? And I know when I was talking to you briefly that time at Ashley's event, you were saying, something about real estate in the metaverse and how to get them. They talk more about that.
So I think that's a big opportunity that a lot of people are still not grasping, right? So real estate in the metaverse, so people buy land and they build houses or art galleries, amusement parks, all these different things. And essentially they become landlords in the metaverse and they can lease them out or rent them out to other people to use their plot of land to have events or promote a product or promote an event or whatever it may be. And that's what's happening a lot right now in the metaverse. There was a company that I met with or consulted with. They're actually like an in real life real estate company, but they kind of built their own metaverse as well. And so they build you a house, whatever, custom house, and then they give you a digital plot of land that matches the house they built with you with the same appliances. So they have all these licenses with like Whirlpool and all these different companies. So your facsimile of your digital house has all the same furniture, everything, the same specs as your in real life house. But now you have a digital plot of land. So there's not just the house, you have the land outside. You have roads, you have water, so you can then hire somebody else to build you more things in your digital metaverse of the land that you bought in the real world. And if people are kind of like enterprise, they go, okay, yeah, I own this house, but I want to have a roller coaster in my backyard for my kids. And my kids play video games. They go on Fortnite. What if they can go on a roller coaster with a VR helmet or whatever in their own backyard and entertain my kids that way? That's one level, right? Or they can say, hey, kids, we want to give you some early access to start being a young entrepreneur. And a lot of kids are building now. So Minecraft, Roblox, kids are building. Like they're intelligent. They're the next level. So these kids, the parents can have the metaverse land, the kids build experiences for their friends and charge, hey, you want to come hang out in my metaverse and play a game? Let's play laser tag or play manhunt in the metaverse. But you got to pay me 0.01 Ethereum to come play or whatever it may be, right? For admission fees. And that's another way kids kind of like think outside the box to be young entrepreneurs.
Wow.
So I think that's a layer that
I was thinking about, honestly, because when you were saying that, my mind was going there. I'm like, okay, so if you build a house and stuff, like you have these glasses on, and like you're not really opening your fridge, you're not taking any food. But the roller coaster thing made sense, because like you could go and you could actually feel like even when you go to arcade and you feel the things shaking and stuff, it's fun, right?
Exactly.
So you get those kind of things. But I guess what people would like the house too, I guess maybe because it's not a house they could currently have, but maybe in the metaverse they could have it or something like that.
Too, right? But I think the company, I don't want to say the name or whatever, but what they built there is and I believe what they're doing too, that this will be another way that people can also reach more people. Hey, I bought this house. Remember there's business of buying and selling houses. They're flippers. You can reach more people all over the world. Here's a digital version of my house that I'm selling. Say people in Asia want to buy real estate here in Canada. Hey, visit my metaverse with all the houses that I built. I'm going to sell to you. Send me Ethereum. House is yours. Right? And you can send your kids to go to school here in Canada. You own the house already. You have the metaverse version of it. Whatever you can do with it. There's so many different possibilities with it, right? And I think right now, once again, we're still at like phase 1. So that's one use case that I think is beneficial. But a lot of people won't see that as valuable yet. I think it's a super valuable tool. Right? But that's just me right now.
Even right now, something that's been very popular, and I've used many times with my clients too, is even virtual staging. Right? So because like during COVID, like some people don't want people in their house and stuff like that. So, you get the photo and then the photo they just put furniture in there and it looks like it's real. So it's kind of like already started, and those pictures work too.
So imagine that now.
You
can go in this, another company that has like a showroom, but it's all digital. Like it's a VR helmet. So they go, hey, here's they have like the model of the house there. Put on the VR helmet, and you can actually walk through the model of the house in the metaverse. And I think, and you can do it from home if you want to. You can do it at the showroom that they have, and you can see all the models. Some showrooms have, or whatever, they only have one model house typically, or maybe 2 model houses, right? Now you can have all 30 of your different models in the metaverse, and then people can come and say, okay, I want to go look at model 35. Hey, go upstairs, go to your bedroom, and it'll look and feel like how the real house is going to look like too. So it gives you another buying experience. And I think that's the big thing for Metaverse too, is going to be how people buy things. So say, new family, mom's at home, newborn baby, needs to get groceries, dad's at work. I want to go to Walmart or Amazon. Put on your VR headset, go shopping. And it's like you're shopping in the supermarket, but you're at home. And everything gets sent to your house an hour later. And you bought it all in the Metaverse with, digital currency and away you go.
Okay, so this is perfect. Honestly, thank you for sharing all these gems.
My pleasure.
So now, let's say you went and you purchased, like how you're saying, you're going around and like inside your VR, you're doing and you're searching for all these things, right? Like, let's say when you purchase the item, right, it gets sent to you, and then you're always talking about you pay Ethereum. I never heard you say dollars yet. So, Okay, talk about that. Like, what is Ethereum the dollar of the metaverse or something?
Essentially, right now, yeah, it's the currency of choice. It's the currency that has the most value that people utilize to transact and do everything in the metaverse.
Okay.
There are other chains, but they're not kind of as widely accepted and different. So, like, I think right now, Amazon takes Ethereum. And
Oh
Bitcoin,
wow, I didn't know that.
Yeah.
Okay.
I think Tesla just announced they take Bitcoin and Ethereum as well. Like, so a lot. Lamborghini, you can go buy it with your Bitcoin and Ethereum. All these kind of like top tier companies are now integrating digital currencies, or, cryptocurrencies as a form of payment. And once again, for me, everything in my mind is kind of right now. Cause I do operate heavily in Ethereum.
Yeah,
because that's like my currency.
That's what, and so usually you could get everything with the Ethereum.
Essentially, right?
Okay.
And everything else is kind of built on Ethereum too, right? But Ethereum is kind of my gateway to all the other tokens that I may want to purchase or own and everything like that, right?
Okay.
So that's like my most utilized currency. But when I spend it, I use it as a store of wealth. So I use my Ethereum to buy NFTs, and I primarily buy Ethereum-based NFTs. Yeah, I have some Solana ones. I have some layer 2 ones like Polygon or Immutable X or Solana ones I have. But those are not the ones that have the value. Ethereum does. But but any currency that you use to buy NFT, for me, is kind of a store of value. Not really, so I can sell that NFT and get back the same amount of Ethereum that I spent or more.
Yeah, because if it goes up. Okay.
Or not even goes up. It goes up in value, but I also get more because when you buy one Ethereum, it's always going to be one Ethereum.
Okay.
Unless you put more money on top of it to buy another Ethereum.
Okay.
Whereas with NFTs, you can say, okay, I'm going to spend one Ethereum on this NFT. That's one Ethereum today. Maybe in a month's time, it's now worth 2 Ethereum. Well, Bored Ape's the best example. Yeah. It minted out for 0.08 Ethereum, which at the time, a year ago, was probably around like $450 Canadian.
Okay.
They were able to grow that 0.08. If you held it from that day until today, you grew your 0.08 Ethereum to 120 Ethereum.
Holy!
There's nothing else that you can do that with.
Yeah, exactly.
Say, you buy one Bitcoin, it's going to stay one Bitcoin.
Yeah.
It's not going to grow to 5. Magically without you adding more fiat money on top.
Okay.
So when I saw NFTs, I looked at it like that.
Now it's like multiplying again. You have to
and that's how I saw it.
Okay,
I can utilize NFTs to multiply my net worth via Ethereum, and I can just sell it back and have Ethereum. I can then move it around, buy other tokens, buy more Bitcoin, whatever I want to do with it, right? But this is the vehicle that I can utilize to grow it.
Okay.
Without having to take my in real life money and keep on adding.
Yeah.
Or some people do these things called dollar cost average, and they just add a little bit every single week from their paycheck, and they slowly build up to another full Ethereum or whatever.
Okay.
But NFTs is a more aggressive way and faster way to do it, but highly risky.
Yeah, exactly. So with the housing people though, like how do you find these people out? Like if I wanted to go buy land in the metaverse, like what do I do? Just search online or? So
essentially there's a place called OpenSea where all NFTs pretty much exist on the Ethereum blockchain. There's 3 main ones right now, 4 now with Labs. So there's Decentraland, which was the first kind of metaverse that kind of allowed people to buy plots of land in there. There's one called Sandbox.
I heard of Sandbox.
Sandbox is like the second one. Another one called Crypto Voxels. And there's some other ones that are smaller. And then there's now the other side, which is by the Bored Ape founders called Labs. So those are the 4 main big boy like real estate plays in the metaverse, right?
Okay.
And you can buy all 4 of those on the blockchain via OpenSea Marketplace. Okay. You can choose how big you want. You want to buy 2 plots together to build. But once again, when you think about like the square footage, there's a finite number because they only built a server size this big to hold XYZ plots of land. Yeah. There's another side, which this is going to force everybody else to kind of make it more unlimited. Facebook or Meta, as they call it. Yeah. They're building their own metaverse too, and right now it's kind of unlimited. Okay. So each plot of land that you get from Metaverse right now, and it's still in beta, but I have some friends that are building there, and I've gone there with my Oculus and seen it myself. Oh wow! They're building out like universes. So each plot of land is a universe, which is kind of unlimited. Yeah. And I think that's the model that you're going to see other companies because once Meta brings it out to the world, it's going to change a lot of things because there are big conglomerate behemoth, right?
Yeah.
And they're saying, hey, you guys are giving people this really finite box to build in. We're giving them this open canvas that's unlimited.
Yeah.
And they can build vertically, horizontally. They can build whatever they want.
Wow.
And build everything. Like it's a universe. They
can
build different planets in there. Like all this crazy stuff they can do. And I think that's the real future of it.
So the people that have like their little worlds right now, like what you're saying is they're going to be like competitors of Facebook, or
well, they're trying to be, but they're all smaller.
Oh, yeah,
Meta has.
Yeah, Facebook probably buy them out and bring them within or something like
and
that.
And that's probably what I can see happening.
So also bring up their value in terms of what they're doing.
Essentially, but once again, this is all speculation.
Exactly.
I don't know how it's going to go because everybody's got a different line of code as well. So each metaverse, and I go into all of them, and they're all very different. They all give me a very different experience, a very different feel. So like Decentraland, I'll go in there every night just to go in. There's like casinos in there. There's all these different things you can go and have experiences in the metaverse. And people are in there every night at the casino playing roulette, poker.
Are they playing like for their Ethereum?
Ethereum. Or there's a currency in the casino as well.
Okay.
So there's different layers to it. But people are there every single day, and that's more of kind of like it's more adult entertainment in Decentraland.
Yeah.
And you can go have like your own private clubhouse, have meetings in there, all these kind of, you have your own dedicated server. So that's that. Sandbox is more of kind of like a video game.
Okay.
Think about like Super Mario, like a platformer.
Yeah.
So when I did the Sandbox beta last month, I got access to it. So I was just experiencing. People built that, but there's more. It's gonna probably onboard more youthful people.
Okay.
It's more of a game. You don't want to go there and have a meeting in.
Yeah.
It's also block figures and more voxelized, where Decentraland more kind of looks more humanoid and more kind of more mature. Right?
Yeah.
And then Crypto Voxels is kind of similar to Decentraland in a sense, but it's more antiquated. It's not as smooth, but it's more of a creative where you can showcase your art, and then people kind of build these art galleries in Crypto Voxels, right?
Okay.
We haven't seen what the other side, which is the Bored Ape Land. We don't know what that looks like yet. We've seen some samples, and that looks more like a video game as well, but more kind of like think of a World of Warcraft kind of video game. Like they call it an MMORPG, right? Which is like a multiplayer open world kind of video game. So we think that's what it's going to look like. Versus it being kind of like a Decentraland where people kind of build, hey, I'm going to build this place where you can rent out to have a birthday party in the metaverse. That's not going to be what other side is. Going to be probably more of a gamification aspect to it.
Yeah.
And I think that's another side too. Is kind of like people want to have fun, kind of plug out. So right now, I think a lot of members are thinking kind of in the video game sense because that's a big industry. Yeah. Another multi-billion, trillion-dollar industry.
Yeah.
So I think they're thinking, hey, how can I get a piece of the video game world and kind of cross-pollinate with those people to make this a viable revenue stream for us. So that's kind of how I think it's going to roll out, versus it being more of a like a realistic use case for the masses.
Yeah. Really I get what you're saying.
You're not going to utilize the majority of the metaverse.
You're not going to go through everything. Yeah, exactly. Everyone has their thing that they like, and when you're talking right now, I can see you're talking like you talk the business side, and then you talk about obviously the service side, because that's the exchange. Obviously money's exchange for service, right? And but the business side, it seems like some people are really on the business, but then on the user side, it seems like it's going to be a great experience, right? Yes. So that's something that you can see it's definitely growing and stuff like that. And you were talking about all these different businesses that you've been going through the years. Like what are some things that you've gone through? What are some key things that you could give through that process of business? Because I've seen you've gone through it a lot, so it's just to share with our viewers and listeners.
Man, and I wish I can give some golden nuggets. And for me, it's just every experience that I've had as an entrepreneur in different industries, as a business owner, it's like be agile, be able to pivot as quickly as you can, right? So that's why you see a lot of large companies. They call them dinosaurs. So when things change, they can't change fast enough, and a lot of times they have to go bankrupt because they weren't able to swiftly change the direction. They have to hey, we built the entire business on this framework. We can't destroy and rebuild. We got to just keep on going the way it is. That's why the banks are the way they are.
That's what you see.
They can't because it's being utilized. And if you try to break it down now, you kill your business.
Yeah.
Whereas like me, I like to operate kind of small and mid-sized companies so I can pivot as fast as I can, as I need to, as things change. Like with the liquor business, we were small enough that we could try to pivot, maybe get another liquor brand under our belt so we can kind of move a little bit, more swiftly and quickly when we hear, hey, your fees are going up, your levies are higher, your duties are higher. Okay, rather than us import, let's try to manufacture maybe a vodka here in Canada so we can, bypass having to pay all of these import fees. And we can do that because we're a smaller, agile company. Right? So that's kind of some advice to entrepreneurs. And be agile.
That's
agile.
Good. That's good. Yeah. Anything else?
Conviction. Like whatever you're building and working on, you have to have conviction and believe in it, and believe in it further than it just putting money into your pocket. Right? I think everybody we have to make money to live. We have families. We have obligations. But me, I've always tried to operate in a way. What am I building that can help? Not just feed my family, but feed multiple families, and give people an opportunity and a platform to build their own business on top of what I built, essentially. Right? So with our label, like we had other artists signed, but I wanted these artists to also have a stake in either the parent company or they can spin off and build their own label on our foundation and have their own artists, have their own sound, and kind of do that as well. And then they can continue to do that. Like what Young Money, Lil Wayne did with like Drake. Hey, use us, or even so Cash Money, then Young Money, and then OVO, right? That's the model.
Exactly.
Right?
Exactly.
And everybody eats. And
everybody eats. Yeah.
And I think, if you kind of take that kind of example and kind of, if you build businesses that way, you think Lil Wayne's starving? He's nice.
Yeah,
you think Baby he didn't have to do anything.
Exactly.
I built the platform.
Yeah, exactly.
So Wayne, do your thing, bro.
Yeah.
I'm not gonna stop your show.
Exactly. Right? Yeah, we want you to succeed. Yeah, you're cheering the ball. Like, let's go.
And somebody say, yo, Drake, do your thing. I want you to do that.
Yeah.
And I think if a lot of businesses did that, they would have a lot more sustainability and like continued success through all of the different seasons. Because we're always gonna have a feast and a famine.
Yeah, exactly.
You can't avoid it.
Right?
And I think people experienced it during COVID. A lot of famine, right?
Yeah.
So, but they didn't. Let's say everybody's building for themselves.
Yeah, exactly.
They're not building to help somebody else out. And a lot of times people say that's my downfall or like one of my, my weaknesses because I build with the vision of how can I help somebody else as well.
Yes.
But then you always hear people say, hey, make sure you fill up your cup up first. If your cup isn't full, you can't fill nobody else's cup up. So it's a double-edged sword.
So do you believe that?
Yeah. You have to kind of build for yourself. And you have to have whatever runneth over from your cup goes into the other cups automatically,
exactly.
right?
Yeah.
But me, I'm trying to change that and do it at the same time. How can I fill my cup and still fill other cups at the same time? People seem to think it's impossible. And I haven't really done it successfully on a large scale. I've done it on a micro level, but not on a large scale where my cup is completely full, and then I'm filling up 10 other cups underneath me. I haven't been able to do that yet. I have my cup's half full, and I help fill up maybe 3 other cups. Right?
That's very helpful because you're doing that right now. You know what I mean? And even when I met you, you're doing that at Ashley's thing because I remember I met you and you knew everything that she's teaching, but you still went out to support her.
1,000%.
You know what I mean? And I think we need to do that more. That's why I asked you, do you think that's true? Because I agree with you. And you coming over here, being on this podcast, it helps me, and hopefully, it gets your word out there too.
And
more people know about crypto, and all that kind of stuff. Because that's what we have to do. We have to come together. So talk more about that too. Like, why is that important?
I think once again, a lot of people are fearful of somebody stealing their thunder or their shine, so they're reluctant to help somebody else because they've been backstabbed before, somebody's taken their idea, taken a deal from them, whatever, and you're just trying to be helpful. I'm sure you've probably lost deals to people you're trying, hey, let's do a co-deal or co-listing together, and the guy's like, I'm going to take both sides of the deal, forget you. I'm sure that happens in your industry as well, right? But you'll still, hey, I'm going to do a co-listing, I'm going to do a co-deal with you because I want to help everybody eat. But I think our generation, because it's very difficult for people to get ahead, right? And even if you have education, you have all these accolades, it's still very difficult to reinvent yourself or whatever it may be. So people are reluctant to partner because they haven't really come across anybody that's been forthcoming. Everybody's got kind of ulterior motives. And I hate to say this, but it's kind of true. Like out of
it's unfortunate.
10 people you meet, 9 out of 10 have an ulterior motive to fill their pocket. And off the back of you being a nice person and giving this information, giving them opportunity. Hey, I was working on this thing, but I'm not going to use it. I'll give it to you. Like, all all right, and the same they take it from you, they're not going to think about, oh yeah, it was Rich that gave me this opportunity.
Yeah.
I'm going to, forget about him, take all the money, not even thank him for the opportunity. I'm not even going to thank him. I'm going to tell him that I made money over here. And they're gone with the business, and they don't call you again for 2 years. Hey, what are you working on today? You got something else for me? And you're like, you don't think about it, you moved on. You're already doing your own thing. You're not thinking about their win. And you're like, and then you may have to stop, hold on. Why are they calling me again 2 years later? Oh, they ate off of me, and they think they can eat off of me again without having to give me anything off that plate. And that's how a lot of people operate, which is sad. Right? Yeah,
exactly. But we got to keep doing, what we're doing, because it is important. And I found, me, honestly, I put my trust in God, because, you depend on people, you're going to get let down, but God always has you, He'll give it to you in a different way, And we definitely have to keep serving, and we have to keep getting that message out there and keep doing it and presenting it, and that's something that stood out with you right away. Like, I just met you, and then you're just telling me everything, and I'm asking questions, you're telling me, and even when I'm not asking questions, you're just telling me something else, and I'm like, this is amazing. That's why I reached out to you right away. I'm like, honestly, we gotta stay in contact, because this is something that we need to get more out there, not just crypto, but just collaboration.
And I agree with you. And to that point, to cut you, I think a lot of people, once they have knowledge or they understand, they have the, like the magic key or the Da Vinci Code, they go, I gotta keep it to myself, right? And I've never been that type of person. If I know it, why would I want to share it with people and give them information to go, hey, here's the information. Do with it what you want. If you're going to try to implement it, you may need my help to help you implement and give you a process. But I'll give you the information. Right? And then most people sometimes are like, okay, Timmy knows the information, but I don't know how to apply it.
Exactly.
Then they'll give me the call, okay, I want to apply this now. How can I incorporate you with what I'm doing?
Exactly.
It's okay, cool.
Let's collaborate. Of course. That's how it needs to be. Trust me, with real estate, I'm always about cooperating. I do a lot of pre-construction as well. And, I work with a lot of different agents, and I found that that's actually opened up more doors. I have some agents that I work with in the past. They have something going on in Calgary. They reached out, hey, Rich, I have this going on, because I reached out to them, So, definitely thank you for putting that point out, because, we need to, reach out more and collaborate more, and like, as we cooperate, more things grow faster.
And I agree with you, right? And I think, once back to your point, if we all kind of like build this network of people that are just going to keep on like we're going to feed each other. We're going to give each other opportunities back and forth. I think we can accelerate our growth, especially in like our demographic, our generation, a lot faster and be a lot more polarizing, because we know this number, the control of the wealth is in the 1%. We're not in that 1%.
Exactly.
And we're just trying to claw our way to get a little piece of the pie, but we're all going after essentially the same piece. In my mind, it's not just the one piece. I think there's multiple pieces, but we're all looking at just one piece, and we're all fighting each other for that one piece. I'm like, that's why I kind of pivoted from what I was doing. Crypto, DeFi, metaverse, like blockchain, NFTs. That's another pie over here that is kind of even in the playing field. Anybody can kind of get in and get a piece.
It's like a big blue ocean that you can just get into. It's wide open.
And there's no barriers. There's no roadblocks, really. Like, if you have the ingenuity, you have the intellect, you have the creativity, you have the business sense, you have like the sense of wanting to collaborate. And Web3, and this is the thing, Web3 is about like collaboration and helping people, and you can't succeed without doing that. Web2 is like, let me build something to sell to you. That's it. And Web 1 was even the corporations build and sell to you. Commercials, TV show, everything was built to kind of condition us to buy their products. Web 2 is like, okay, you see the boom of the .com era and all these entrepreneurs, Amazon, Google, that emerged from Web 2. Let me build, like us, the people, build something to give to the people. But then it became now kind of Web 1. Now the corporations are $1 billion. Pay us to use our services that we initially give to you for free in the beginning. Now we got to, it's different. Web 3 is trying to say, okay, let's rewind the wheel again and do what we tried to do in Web 2 the right way. Let's build it. Everybody can use it. It's open. You want to use it? Come use it. And that's kind of what we're trying to do here in Web 3. Some people bring in their Web 2 mentality. I want to build this and sell it to you and make my money. I don't care, right? That's a small subset. I think a majority of people in this space are building and say, hey, use it how you want to use it. Like even why I use Bored Apes again. They're like, hey, you buy this product from us. Yes, we make a little bit of money from it. But the people, once again, they're able to sell it. Remember, 0.08 is what they charge you. You're selling it back. If you sell it, 120. But the smart people are taking the IP, which is the intellectual property that they own.
Yeah.
So the company gave them full rights to this image. So think about like you owning Mickey Mouse.
Yeah.
Disney would never give you the rights to Mickey
exactly,
Mouse.
Yeah.
These guys are giving you the rights to Mickey Mouse, your own Mickey Mouse, and you can create your own storyline behind it. Your own.
Oh wow!
So I'll give you an example. There's these guys in LA, own Bored Apes, created like a real estate company. It's like a Bored Ape real estate company, a restaurant, their own line of coffee, their own medicinal marijuana.
Is that in the metaverse or the real world?
In the real world.
Okay.
Their own liquor, branded with their apes that they own, and that's now a brand. So they're selling like their own Mickey Mouse to everybody, but branded on every single product.
Yeah. So they can't change that. Like that's how it is, right? Or they could say, oh, there's a new rule now. Your thing, like, or is it like secure where everyone, this is yours, do what you want with it?
Yeah. You can't change it. It's in it's in the smart contract on the blockchain.
Okay.
Once it's executed. It's executed.
Okay.
Right? Like you can't go back and change the code. Like once they give it to you, you own it, right? But when I digress. So the code you can build on top of the code. Okay. But the original code you're not changing. Stays the same. And they're handing it, hey, we built the code, has these features, it looks this way, we're giving it to you. You own the base code. You can't use our logo from our company, but your code, you can use to do whatever you want to do. You want to go build a car company with your ape and brand it as Ape 567, or if you create your ape and give it another name or change the look of your ape, you can do that. Yeah. And you create a whole business and multiple businesses around this one asset. Okay. And I think that's how the industry has to look at these things. Like, hey, I got this asset that has IP rights. Let me build more stuff off of it to create multiple revenue streams. So like these guys that they're doing that, they're using their one ape or two apes and creating 3, 4, 5 different businesses from this one asset that they paid $450 for.
Yeah, and it's still gaining value. That asset's
still gaining value and still giving them other airdrops that are valuable. So they hold the asset, it gives them an airdrop, okay, say $150,000, another airdrop.
Airdrop is like something new that they're adding or something?
Or when I say airdrop, so the company is giving you another asset for free. Okay. They're going to give it to you, and you don't have to pay anything else for it. You're not paying gas fees. They're covering all those costs, and they're giving it to you. Okay. And just for thank you for being a customer. Okay. Right? Yeah, think about if you owned a Louis Vuitton purse, and they said, hey, thanks for buying our purse. We're going to give you a pair of shoes and a blanket just because. Yeah. That doesn't happen. Yeah. Web3, they can do that. Okay. Right? Just because, and there's I'll skip back to something. The music business. There's a guy named Ryan Leslie. Yeah, I know Ryan Leslie. Yeah. He kind of was doing this before crypto, before the metaverse, before Web3. Wow. That's why he kind of left the music industry, the traditional, and said, hey, I'm taking all my music off of iTunes, off of Spotify. I'm going to kill my music label deal. I'm going to be completely independent and interact with my customers directly. I'm going to know their birthdays. I'm going to know where they live. I'm going to know what food they like. I'm going to know their interests. So I can then reach out to them directly and say, hey, because you bought my album last year or whatever, I'm going to give you a free whatever, concert experience, a t-shirt, an exclusive song that I made that's going to be dedicated to you, whatever it may be, right? And that was kind of the beginning of what's happening now in Web3. Well, that guy's a genius. He went to Harvard at 16.
Isn't it when he lost his laptop or something? He was he had a big reward for it. Maybe he had some of these files out there already or something.
So that story, I won't go too deep into it. So the laptop got stolen from one of his, he was on tour somewhere, it got stolen. The reward that he was offering wasn't for the laptop. It was for the information on the laptop. Exactly. So we got the laptop back, but the person had already wiped it. So it had no information. So now it's just a laptop that's worth $1,000. I'm not going to pay $1 million for a blank laptop. I needed the information on there. That's what's valuable to me.
Right? And that's speaking your language, because that's the IT.
You got it.
That's the IT.
You got it. Right?
So and that's what I'm saying. Mentorship is important because you're in that game. You're obviously mentor in this whole game because it's brand new. It's a brand new space, so people need that type of mentorship, right? So what is it that you say if someone wanted to reach out to you, like, you know, obviously you're giving free game here all the time,
For sure.
but, you know, I'm sure there's like a next step, like, you know, like people want to be guided in a way or something like that.
For sure. So like, yeah, right now I'm kind of figuring out how do I offer not just a program, but like my consultant or advisor services, which now I do have out there. So people who, hey, I'm going to release a project, or I want to start investing in the space, or I want to, you know, somehow find my way to work in the space as well, or pivot my business, and how do I build my business in the metaverse as well, right? So those kind of 3 or 4 things I'm starting to consult and advise people on as well. And so I'm pretty visible. You can find me on, you know, LinkedIn and Twitter and Instagram and TikTok. I'm everywhere.
Nice.
My web, like I'm everywhere. So I'm not hard to get in touch with, but a lot of people do reach out just to kick the tires, which is fine. I'll give some information. But if you're actually serious and want to build something, we need to have a formal type of understanding of what you're trying to build, what your budget is, and we can actually like can help you build it. Right? Not just kick the tires, try to like take some information and do it on your own, and then you try to come back, hey, it didn't quite work out for me. Can I?
Exactly. Yeah.
Okay, if you want to really work together, you know, let's actually work together.
Yeah, exactly.
Don't just take the information I'm telling you. Go make some money quick because you think you can make it quick because of this emerging tech. And then you know how to implement it or sustain it properly. Right?
Like from what you're seeing right now, I don't think it's that easy. Like with this game, because I'll keep it real. I threw in some money in a few different things, but you know, like you hear about crypto, and I'm sure a lot of people are doing that.
Of course.
Right? And even one thing, when I told you, we just had Ashley on here, right? And she messaged me one time and she said, "Oh, it's Ashley." I'm like, "Which Ashley?" You know? Because she has like 4 or 5 people, you know, that have her name and are saying they do crypto, you know? So you're seeing a lot of that right now, you know, on social, you know, where peer people are saying they're, you know, making crypto. So like, I want you to go into that because that's a big deal. I think we need to make people aware of.
For sure.
You know, and then how do they know, okay, this is the right way you want to get in?
So it's difficult because you think about, you know, I'm not throwing any shade at this industry, but there's a lot of people utilizing these multi-level marketing techniques in crypto, right? Because it's kind of like, hey, get rich quick. Come here, invest your money, and you're gonna make $100,000 in within the next 6 months or whatever it may be. And people kind of sell people that dream. I'm never selling anybody any dream because I know there's ups and downs, ebbs and flows, and all of that. And I think you have to be able to weed through the people that are, you know, trying to just sell you the Kool-Aid and hey, you know, pay me this monthly fee and I'll teach you how to trade or invest or whatever, or copy my trades, if that, right? And there's nothing wrong with that per se if you're transparent with, hey, results are going to vary across the board. Like I'm not guaranteeing you're going to make a return on your investment here, right? But that disclaimer isn't there a lot of times. So people go and pay $1,000 for a program to learn to trade or whatever, or they'll put in $1,000 in an arbitrage trading system, and it's an automated system, but not understanding that there's another layer. Hey, you got to bring people in to sign up underneath you, and if they don't invest, your percentage is lower. They're not really giving people all of that context to you know what they're getting involved in, and I think that's what kind of turns people off because like, oh, I thought I was gonna make whatever, XYZ. You said that in the elevator pitch. But you didn't tell me the fine print. And there's always fine print. Whereas there's very few people that are very forthcoming. Hey, I'm going to give you all this information at a very high level that you can probably take some principles, and if you want to go on your own and dig deeper, you can. But I'm trying to give you enough for you to understand that you just don't jump in this and start making money. So I've been in crypto for quite some time. I didn't really buy my first NFT until like September, October of 2021. So I'm still fairly new in NFTs, but I took my time to kind of understand. I heard about it, but I was still focused on crypto before I went into NFTs, right? And I said, I don't know what this is. I don't really understand the use case of it. But I sat on it, said, missed the Bored Apes, I missed all the big ones, because I was just trying to learn. And then finally I said, okay, I think I know enough. I was hearing too much about it. Let me take the time and really start to invest in my time to learn. And once I started to learn, I said, okay, I can start purchasing certain assets that I now understand. I talked to the founder. I talked to the developer. I talked to the artist. If I can talk to those 3 things in the business, I don't even invest in it. That's just
and
me.
they're accessible? Like
and that's Web3. They're accessible. That's kind of like the other, you know, endearing quality of Web3. The founders are accessible. You can't just go and call Elon Musk or Mark Zuckerberg. Hey, I don't like the way you're building this business. Web3, you can say, I don't like the way you're building this business. Here's some ideas. Or tell me why it's going this way. Or tell me why you chose that. And me, as you can tell, I'm a very inquisitive person. And I hold founders accountable. I understand I've been a business founder myself. And my partners, my clients, our fans hold me accountable. Hey, why did you guys do this? Why didn't you do that? I'm expecting the same type of transparency from those founders as well, right? So that's kind of like my keys of what allow me to invest into NFT projects, because if they don't have a business structure behind them, I can ask a few questions to qualify them off the bat. I already know what to ask them. I can tell, okay, you're here, you're trying to make a quick bag. You're trying to flip and try to steal the money and run away. You don't care if it goes to zero tomorrow. You made your 2 million, 3 million, 4 million in the first day. You're gone. And that happens. But now there's also like a governing body task force. That's now targeting those people that steal people's money from these rug pull projects. And people now every week are getting indicted. And they're getting sentenced to 20 years in jail plus restitution. Federal prison. Not just say I'm gonna go to the jail cell up the street. No, you're getting shipped away. You're gonna go to the big boy jail.
There's a lot of frauds and all that stuff going on. Like seriously, I guess because crypto's so new, nobody knows what it is. Right? And people want that quick money. You know what I mean? And throughout this whole conversation, you've been talking about long-term plays, right? That it seems like in crypto as well, you're in a long-term play. So I want you, before we fully wrap up, I want you to go into that. Why does your mind think like that, and why is it important to think long-term?
For sure. So I guess me too. Every time I built a business, I'm thinking about 5 years out, 10 years out kind of thing. Because I'm not just, yes, I want to build it quickly enough to make it start generating revenue so we can keep the business going and pay our family and everybody can eat food. But I'm always thinking, okay, what can I do to sustain this long term, right? Because I don't think people think even 3 years. People barely think 3 years ahead. Right? So once again, my business.
But what does that do for you when you think long term? Like, say in the past, like what have you found that do for you? Like when you're thinking long term?
For sure. So thinking long term allows you to actually start to theorize what is going to be a sustainable business strategy that can, once again, be implemented, through every year, through every season, good and bad. That's going to guarantee that this is going to keep the lights on. That's thinking long term, in my opinion, right? So even when I invest, I think about the same thing. Okay, what is this blockchain or this coin or this NFT or this technology going to do 3 years down the road, right? Because if they don't have a plan for what's going to happen in 3 years down the road, that means they're not going to be around in 3 years, right? And then I got to now think like a trader and just trade my way out. Right? Whereas in business, it's hard. You can't trade a business, right?
Exactly.
You're going to die with the ship or you make it succeed. That's it, right? There's no trading out, right? Once you commit to a business, either you're going to sink or you're going to float. That's it, right? So that's how I've always thought about. And you go to business school, MBAs, 3 to 5 year SWOT analysis. And they say the first, I forget what the percentage is, right? But XYZ percentage of companies fail within the first 3 years and they never come back, and that's it. Bankrupt, on to the next thing, right? So when I hear that metric, I'm like, no, I want to survive past the 3 years. Right? Where, once again, I now have a sustainable foundation that can build other things on top of, and I can continue to build until I die. Right? And pass it down to my children and bring family in so they can create revenue for themselves and create their own dreams off of the foundation that I built.
Generational.
1000%. Because, sad to say, this generational wealth, it has to start with our generation. Our parents, they didn't have.
They came here. That was a big thing. They did. Exactly.
But they had all the odds stacked against them. Whereas us, we had things more in our favor, still stacked against us, but in our favor. So, the least we can do is try to figure out a way to set up our lineage for the next 100 years. And that's what every other culture that's been successful for the ages, that's what they've done. Like, okay, how do we set up generational wealth? and they look to the youth. Okay, we've got it this far. It's going to be the youth that kind of innovates and figures out how do I build on top of the foundation that my grandfather built, or my father built, or my mother built, or my grandmother. How do we build on that? And I think a lot of us don't even think that way.
It's true.
Like, how can I build my own to get my own little bag?
Yeah.
Right? Okay, what's been built by my friends or my family or whatever that I can continue to build, and we have a huge network, and we all reap the benefits because we're all intertwined. So you may have a real estate business. I got a crypto business. This person's got a food service business. This person's got let's call it event planning business. This person has whatever, right? And we just keep on building our networks, and we all can just work together. And then sustain that to the end of time. Right? I think that's what we need to really focus on doing. Back to your point, we don't do enough of that.
Exactly.
So we're always in competition to get to the
So when you're competition, you're thinking short term, you're saying?
I think so.
Yeah, I agree.
I think so. And I don't think it's really competition at all.
I agree with you 100%.
There's enough pie for us all to eat. It isn't just one little slice.
For sure.
The entire pie is there.
Exactly.
Right? But you gotta change your thinking.
Yes.
And change the way you view the world.
Exactly.
Like, there's so many ways to get to success. Right? That's how I look at it anyways, right?
Yeah, it's the truth. It's the truth because, like, even with real estate, it's the same thing, right? Like, I'm in a brokerage, I'm with realtors, but I'll still have realtors come on the show, like work with them and see how it works. Because, like you said, there's no such thing as competition because each of us are all unique. So we all have our unique touch to something. We all have that approach that we came. Like you said, people approached you because they knew without you, they wouldn't even be able to do what they're able to do. And that's what we have to see each other. We're all connected. We have traits that we can help each other out in.
And I think what you're saying is very important because a lot of people don't know how to identify their weaknesses and how to then reach out to people that have strengths in the areas that they're weak in. Nobody wants to acknowledge their weakness because they think it's a vulnerability. And I think that's, we've been conditioned to not talk about our weaknesses. Even if you go for a job interview, sometimes they do, but rarely go, what are your strengths? How can you benefit our business if we hire you? And never talk, hey, what is your weakness and how can we help you in our business to build strength out of that weakness?
So we're conditioned.
Of course we are. Big time.
That's serious.
Right? Think about your schooling, right? Like, if you have a weakness, I think about, I wasn't always a great speaker, right? I don't know why, but I just never was at school, right? So people may have thought about it. To me, I wasn't. So that was a weakness of mine. But it wasn't really, you weren't taught to target your weakness. Okay, you're not good at that. You're good at math. Focus on math. Or you're good at sports. Focus on sports. Don't never train or teach you to work on the weakness. You're not good at that. It's okay. Pivot somewhere else. I understand it. But now as I got older, I said, no, I want to work on my weaknesses because I don't really want to have weaknesses. I want to have multiple strengths. I understand you have to have weaknesses at points. But I want to always be able to learn and build on and turn those weaknesses into strengths in some shape, way, or form.
And if there's other people that are strong in those things, then they can help you build that strength.
1,000%. I don't want, back to that point too, I would love to work with those people that have those strengths, but not just to hand it off to them. I want to learn. I want to study them. Why do you have that strength that I don't have? And I may never be as strong as them in that place, but if I can have some bit of the knowledge that I got from them from having that strength.
An overview of it. And
I have more tools in my repertoire to attack the world in a positive way, right? So that's kind of how I look at everything. That's why I kind of dabble in so many industries, right? I wanted to have as many tools in my tool belt, right? But I think, what's that saying? And I don't want to butcher it, but to go, a jack of all trades is a master
or something.
But then there's another.
Exactly.
But what was the other piece of it? But like, I'm gonna butcher it, man. But I read the full quote recently. But it says like a jack of all is better than a master of one, or something like that. So I go, end of the day, having all those multiple talents and skill sets is still better than being a master of one, right?
Exactly.
And once again, the media has cut off the second half of that quote for so long.
Exactly.
All you hear is that. Your parents like, oh, you can't be a jack of all trades. But then the actual quote says, no, it's actually kind of good to be, because that's how you learn. It's how you expand your brain, your mind, right? Your soul, your spirit. Is you try to learn as much stuff as you can.
Exactly.
That's what you said. We we're conditioned to think we can only do one thing. We're conditioned to not look at things where we can.
Yeah.
Hey, you can only be good at one thing. You can only master one thing. Focus on that. Go to school to study this specific thing. So you can only work in this industry for the rest of your life to retire, and that's all you're gonna do. And I never believed in that.
Okay.
That's why I've always kind of tried and experimented and taken risks in so many different industries because I never wanted just to be.
Was that just you personally, or did someone put that into your mind?
I think me personally.
Okay.
Because you know, family, friends, they always say, no, just stay at the band. You're good. Retire. You're good. And I'm like, I can do so much more. This is good. This is cool. But I want to do so much more with my life. And be able to help more people. Me making a good salary is only helping me and my immediate household. Not even my family, just my household who live with me. Right? My wife, my daughter, or whatever. That's all I'm helping. I can't really help anybody else. Right? I'm not making enough to help my sister's family or my cousins or my parents. And I make enough for me to live a good life, not for everybody else. And I looked at entrepreneurship and I can build something so large that it can trickle over to help so many more people. Not just my immediate family, my family around me, my partner's families. It just extends so much further than just the one person making a good salary.
Yeah, man. For sure. I know you're a servant, man, and keep serving. I appreciate you because contribution is key, and I see that's where your mindset is. It's not about you; it's about everyone else. And that's what we're about here with the wealth, because that's what wealth is. It's about feeling good. And, we want everyone to get the experience, to feel good, to be appreciative of life experiences that they're living in. But I appreciate you, Tim, man. Honestly, you went in, man. You gave a lot of gems, man. I appreciate it.
I hope it wasn't too much.
You gave exactly what it was, because that's the more information that you give, the more aha moments are going to come out. And the more like that. Those little key pieces, just I learned so much from this, and I know so many people are going to. And you're always welcome, man. This is something that we want to keep going and keep growing. And it's going to grow because of you, so I appreciate you, man.
Rich,
get the worldwide like you, international,
We all can be that, man.
Exactly.
So we're here to collaborate and kind of empower each other, man. I think that's important, too. So when you call me and say, hey, I want to come support what you're doing because, with this podcast and sharing the knowledge and the wealth, and I've watched the other ones in the past. And
nice.
And once again, before I met you, so I'll give you this quick. Before I met you, because I know one of your past guests, and I had seen this person post something. And I'm like, man, this is a good interview.
Oh, for real? Okay.
And I was already a fan, but I didn't know it was you. And you sent me the link of the full. I'm like, oh shoot, this is your thing.
Oh wow, that's it. So even when we connected, you see, that's how we're meant to connect.
I'm telling you, man.
I really believe in energy, and and obviously the ultimate energy is love. And I've been finding myself connected with people on that frequency, and I know that's what you're all about. It just exudes out of you, like you're out here to serve, you're out here to help.
1,000%, man.
Yeah, appreciate you, bro.
Thank you. I appreciate you, man. Thank you. Appreciate that, man. Yeah.
Yes.
So I know any parting words. Oh man, like the parting words I would say is like, don't be scared to experiment, right? Don't be afraid to venture out into the unknown, because I think the unknown is kind of where you find the magic. And that's why I've always kind of tried to be on the cutting edge of things, and I'm not afraid to jump into the deep end. I may not be the best swimmer immediately, but I'm going to figure out my way when I'm in the deep end, and I'll figure it out, right? People look at me and think I'm crazy because I keep on doing this, right? And I don't want to say I'm addicted to it, but I'm on this journey. I want to accomplish something so large that, once again, helps an abundance of people, right? Like beyond just what I can reach, with my hands. I want it to reach worldwide. People like, man, whatever was built from what Tim was building to help all these different people in different industries, it's trickled over so much further than what his initial idea was. And I always want to be able to push that forward. So anybody, I want them to do the same thing. Just think outside of yourself and try to just build something to help the world be a better place, essentially. Right? And when I think about blockchain, that's the purpose to make things better, right? To make our financial system more efficient, to make the usage of technology more than one dimensional, make it like multi-layered usages of technology. Technology solves all these problems in the world with just not the economy, with the environment, with sustainability of your health. Technology can help so many different things and provide so much value. It's unlimited, and I think that's the piece that's lost on a lot of people.
Okay.
Because they don't see it that way. They think it is very
when people are one-track minded, so it's like you said, have a wide open thing, and you need that open ear, open mind, and and that's why I guess they're so approachable. That's why I guess you hear people out, and that's what it is. So please plug in, how to reach you again, so you can have that on here.
Simple. So it's a CEO Tim on every social media, so Instagram, Twitter, TikTok, Facebook, and then my old website I'll give you this piece too. So I built this old website probably 2008-ish when I was at the bank. So when I was starting to do like my business degree and my Six Sigma and stuff, and it was actually a former partner of mine that came to me with this idea. He was like, "Hey, we should build this website, and this knowledge that you hack, I've always been given knowledge." Yeah. He's like, "Let's put it into like this blog format and write articles and have it be like a repository so people can come back and search business plans, strategy, investment." Anything you want to just learn about, and I have all these articles just there. And I just kept on paying the yearly renewal fee for the domain. Oh, nice. And it's kept it there. It's still up there.
Okay, so what's that site?
So it's called TorontoIsMine.com. Okay. It's one thing. It's an old structure, but I haven't changed the design of it. But because if I do that, I can't have the information categorized the way it is. So it's really just a database.
Okay, nice.
But if you use the search button, you can search a whole bunch of stuff, and it's still there, and it's very relevant information. Okay. And I wanted to build that for free. So me and my partner said, "Hey, let's give this to the people for free because this is valuable information that
you use,
that I use, but it was also information that is gate kept. Okay. Right by the higher powers, by the educational system, that you have to pay us this fee to get this information." And I was always in the belief that the information should be provided for free. If I want to pay for that, which is cool, you're going to teach me how to implement the knowledge. Not just give me the knowledge is there. And I found a way to kind of give people the knowledge from the MBA textbooks. Like I gave knowledge. So that's why I kept the website open.
No, thank you. I appreciate that, man.
My pleasure, man.
All right, so that's what it is. We have Tim over here, Eccles.
Yes.
You got it. Eccles, man. And he's such a good vibe. Make sure that you go onto, all of his pages, show him some love, and reach out. I had Aaron Charles on here, and he said something that was impactful as well. And he said, how can I help you? And I'm on that tip too. So 100%. Even with me, like, let me know how I can help you in whatever it is that you're doing.
I appreciate that.
And anyone else, if you need help, reach out to us. That's what we're here to be.
That's the name of the game. We're gonna help each other because we're building. We're still young, but we're not. We're still old enough to have experience. Hey, guys, we see what it was, and we know what it can be. So let's start doing this now. It's never too late to build with your fellow.
Like you said, it's up to us, right? You said it. It's up to our generation. We got to do it.
It is, right? Sure. And it's pressure on our shoulders, but I think it's a good pressure to have because we're the ones that are kind of like forging this path that have never been walked before. So
for sure.
It's exciting, man.
Yeah, man. All right, so that's what it is. Well Top Podcast, amazing episode as usual. Make sure everyone subscribes to this. We're trying to make this grow, and we're based in the GTA, man. GTA, there's so much talent, there's so much entrepreneurs, there's so much that's going on over here, and we just need more outlets. So that's what we're trying to do here. Thank you for tuning in.